Everyone is like
Yeah.
that.
Okay, yeah, then let's start into the series of governance, corporate governance preparation for the exam. And here too, of course, you have also the slides. And as usual, I always organize it according to some other tasks like test yourself, stop and think, then the case studies, then also a comprehensive case study, and the summary syllabus as a fact sheet, yeah, for the exam. That's quite important. And last but not least, also for exam preparation, that we have some 25 most salient questions to each topics. The corporate governance is more comprehensive, is one of the most comprehensive paper within the Chartered Governance qualifying program. You see here, we have 16 topics. So each for the next 16 weeks, we will dive through these topics in great detail. Yeah, whenever you have questions, please feel free to interrupt me, that we have also quite a lively discussion.
Okay.
Yeah, first of all, when we deal with corporate governance, it makes, of course, sense, to try to define what corporate governance is about. Yeah, you see here there is a kind of chart or picture which tries to summarize it. Yeah, corporate governance is therefore sitting in the center of business activities. Yeah, all starts usually with defining a vision. Yeah, based on the vision, a company formulates their mission, and the mission is the basis to come up with a strategic objective. And then, of course, we have also operative objective, and these are usually summarized as smart goals. Yeah? And to steer this system, of course, you need the board of directors and committees. Yeah, and of course, in terms of board of directors and committees, it depends on the size of the company. Yeah, how much directors you have, how much committees you implement. Yeah, ultimately, it's that you implement a legal and a regulatory framework. Yeah, according to the regulatory framework, you will later on carry out your corporate governance. Yeah, so that you have a kind of system how it works. Of course, alongside alongside your whole organizational hierarchy. Yeah, you know, every company is organized mostly in a hierarchical way, especially in Malaysia. Yeah, and therefore the corporate governance must be tailored according to this hierarchy as well. And here, the corporate governance, it's very important that you regularly monitor what's going on. And usually you use here also the help of internal control. Yeah, and here internal audit will be a department which is here very supportive. All is about transparency and accountability. These are the primary objective of corporate governance. Yeah, so transparency, accountability, and also in the book is mentioned that it should be dealing according to fairness and ethical behavior. These are the core pillars of objectives for a corporate governance system. So all in all, we can say that corporate governance is a system of rules, yeah, a system of practices, how you can steer, how you can manage, how you can direct, how you can control your company. Yeah, that's what corporate governance is about. And of course, you need some bodies for it. Yeah, because ultimately it's you need board of directors, you need management, and you need the teamwork of all stakeholders. Yeah, and therefore corporate governance is helping you also to formulate here the relationship between the various stakeholders. That's here a good definition for corporate governance. Maybe I make it a bit bigger, yeah, then you can see, or I switch to the presentation mode, then it's even more convenient for you to follow.
Yeah.
Yeah, now
I
it's bigger, yeah.
bigger, bigger, yeah. That's true.
Okay, yeah, that's good. You see here, corporate governance has quite yeah, historical background. It already dates back to the Greek empire, to Plato. Yeah, that was around about 2,500 years ago. Yeah,
Mhm.
and Plato gave a statement which is still valid today. Yeah? If you don't take an interest in the affairs of your government in terms of govern, yeah, then you are doomed to live under the rule of fools. Yeah, that was the opinion of Plato. And if you look into most yeah, governance issues, whether it is a business, whether it is a yeah, company, whether it is the government itself, yeah, you see, yeah, mostly it's not, yeah, and entities are not really governed by the most intellectual people. Yeah, and that's exactly what Plato already found out some thousand years ago. Yeah, and in terms of modern history, we can say that corporate governance goes back to the, yeah, to the 16th, 17th century, yeah, where the first bigger companies evolved in terms of yeah, entities, yeah, which span, let me say, which also already operated on international basis, yeah. And the most recent origin of corporate governance, yeah, is shaped by the United States. And here, this terminology, corporate governance, comes into place, yeah, in the 1970s. Yeah? And here it was really about to oversee or to stir the big, yeah, evolving international multinational companies. Yeah. And of course, in the last 25 years, yeah, or in the last 50 years even, here corporate governance, yeah, is still evolving and still becoming more precise in terms of rules, regulation, guidelines, and so on. Yeah, if you think about Malaysia, then we have the Malaysian Code of Corporate Governance, yeah, which is reshaped. The last update was done in 2021, and it's still be updated in terms of what becomes mandatory and what is still voluntary. Yeah, that's here some backgrounds. You see here in these slides, you have quite a summary of the key elements. Yeah, which key elements do we have? Of course, we need the board of directors as the steering yeah, committee, as the one who are in the driver's seat to make decisions. Yeah. So, and therefore here the board of directors, of course, they are accountable to the shareholder. Later on, we will learn about the agency theory, yeah, which is a theory how you can yeah, how you can regulate here the relationship between the directors, managers, and their shareholders. Then, of course, it's about the shareholder rights. Yeah, corporate governance shall protect here the shareholder rights in terms that are also minority shareholders. They can raise their voice and their concern. Yeah, it's about also that they get the relevant and timely information. Yeah, it's about that the shareholders they are able, yeah, to vote on important matters. Yeah, whenever there is the annual general meeting hold, then of course here the shareholders they yeah, have the right to vote, but also in exceptional circumstances. For example, if a big yeah, business decision has to be taken, then of course, yeah, the management is asked here to give also the shareholder the right here to vote whether this shall be carried out or what shall be done. Transparency and disclosure, of course, you should always come up with accurate and transparent information about the financial performance, about operation, about strategy, about the risk, potential risk. That's also here a topic. And here you see when you look it from the auditor's perspective, the external auditors, then it is about according to their guidelines, the companies, they have to provide a true and fair view of the company. That is very holistic. That is also dealing with the financial status, not only with the performance. It shall give you an overall picture what's going on in the company and the status of the company. Then ethics and integrity. That's of course what also corporate governance is aiming at. Because it has here to take care that an ethical behavior is implemented in a company. That you have here rules how to behave. To avoid embezzlements, to avoid here corruption and so on. It shall really here promote also integrity. Integrity is a summary word for the ethical behavior in terms that you really do the right thing in a right manner and in a correct way, following here or adhering here to legal aspects as well. Then the risk management, it's here about that corporate governance shall also include or closely work together here to identify and to manage the risk. So part of corporate governance shall also be the risk management component and internal controls. Stakeholder engagement here, of course, it's like this that corporate governance is supporting or is asking not only to focus on the shareholder but also to focus on the stakeholder. Stakeholder is the more common, also widely terminology, including here a wide range of stakeholders, employees, customers, suppliers, all who are in a way dealing with the company. They shall be respected and included in taking business, in taking decisions. That's here some aspects to the key terms. Theories. Which theories are shaped or provide here the foundations for corporate governance? We have here the shareholder primacy theory. Then we have the agency theory as well as the stakeholder theory. These are the three main important theories which we have under corporate governance. Shareholder primacy, of course, that's the longest serving theory, insofar as here in the center of focus is the shareholder. It's about focus here on maximizing the value of the shareholder. And this is even done before you consider any other interests of stakeholders. It's really focused, the so-called profit maximization approach. This is the result of the shareholder primacy. Of course, still a lot of companies, they are following this shareholder primacy theory. When it comes to the regulation of the relationship between the management and the shareholders, then of course we follow here the agency theory. That is a kind of theory which explains how they shall work together, because the management shall act in the best interest on behalf of the shareholders. So the shareholders are ultimately the one giving orders or shaping here the strategy of a company. Yeah? And finally, of course, we have here the stakeholder theory, which is a more modern approach. Yeah, and it's also part of organizational management theories, which take into consideration, the interests of various stakeholders, like employees, like suppliers, like local communities, and so on. Here it's about to find a win-win situation for all stakeholders involved. It shall not be that one party prevails and dominates other parties. It's really about to find here the best approach which serves all stakeholders. Yeah, that's here the stakeholder theory so far. Yeah.
Is in Malaysia and in the UK, is it still the shareholder takes precedence? I mean, if there's a
We don't have, there is not an obligation, or it's not mandatory to follow a particular theory. Yeah. So it's always up to the individual companies. Yeah. And it depends on the philosophy of the company, which theory they follow. Mostly smaller companies, they are of course shareholder primacy oriented, whereas public companies, or governmental linked companies, they of course they are already on the way, to stakeholder theory. Of course, in different countries at different levels. Yeah, in Europe, it's really very dominant already that the stakeholder theory is prevailing. Yeah, because even if you want to set up a new subsidiary, or a new company, production facility or whatsoever, then of course the general public has also a vote whether they want that the production facility is exactly set up here. Yeah, because there must be an investigation whether it is not harming the environment, whether it doesn't bring that much noise and emissions to the region and so on. Yeah. In other countries, this is not even of any concern, because they say we built this, and for example, in China, if they want to set up a new huge factory, then even the citizen who have already been living for centuries there, they have just to move. Yeah, so there is no right or wrong. Yeah, it highly depends on on the country itself. I would say in Malaysia, it's a kind of mixture. In China, it's shareholder primacy. In Europe, it's stakeholder oriented.
Oh, okay.
Yeah. Yeah, but it also depends. Also in Europe, it's often also influenced by the general strength of the economy. Yeah, because let me say, if the economy is weakening, then this protection of environment is also a bit downsized. Yeah, because you cannot just protect the environment. Then the best would be that you don't carry out any business, or any production. And that's not possible. So therefore, it's always a kind of compromise. Yeah. But of course,
So sorry, a case comes to mind about there's management are supposed to act in the best interest of the company.
Yeah.
And sometimes the company, I mean, could mean the shareholders, but sometimes the interest of the company may not be the shareholders, like indirectly. And I think a case comes to mind is that there was, I think it was a car company that I remember that he wanted to increase the wages of the employees, and I think he was required to put to shareholders vote because he was afraid that he could not just increase, but he said that it is in the best interest of the company to increase because it will make more profits, people will be happier, and and the company will make more profit in the end. So in the end, it still benefits the shareholders. But I
Mhm.
think the court ruled that no, if the shareholders does not want it, you cannot do it. You're acting out of the interest
Yeah.
of the shareholder.
Yeah, that's also it's highly shaped by the general laws. Yeah, and you know that the civil law or the business law is different in
In
different
the US.
countries.
Yeah.
We don't have a standardized business law which is applicable all over the world. Yeah,
Mm.
because if they say the primary interest of the shareholder is making profit, yeah, then you cannot raise the salaries of the employees. Yeah. In other
Mm.
countries, it's the other way around. First, it comes the salary, yeah, the labor law, because the labor law is general law, yeah, and the
Mm.
business law comes afterwards. Yeah,
Mm.
so
Profits would
if
come
they are
after that.
very
Yeah.
if they are very centric that they want to create wealth, yeah, for all of the citizens, yeah, then they have a strong labor law. A strong labor law takes care that you have that they really get a decent good salary, yeah, and have a good income. And then of course the court would rule otherwise. Yeah, of
Mm.
course then you are even invited, and it is highly appreciated that you increase the salary for all your staff. Anyway, it's then yeah re yeah, you spend the salary. In case of car, almost everybody has a car, yeah, and if you have a good income, yeah, then of course you probably drive a newer car and you replace your car more often than as if you have a low income. Yeah, and so it is even indirectly benefiting, of course, the company overall. Yeah.
Mm-hmm. Yeah.
Yeah, that's but it's really dependent on the country. It's dependent on the philosophy. Yeah, if you think about the general differentiation between Western businesses or Western business environment and Eastern business environment, yeah, the Western is more individualized, so that individuals have their rights, yeah, whereas let me say in Asia it's more collectivistic, yeah, and collectivistic is in my opinion more Darwinistic, yeah, it's tougher, yeah, because they don't take care of the weaker members of the society, whereas in social
Yeah.
societies in Europe, yeah,
It's
they
the
take care
we
also of
survive.
the
Yeah.
weaker one, yeah.
Yeah. Yeah.
Yeah. And that's also shaping in a way the corporate governance and the idea and the philosophy here behind. Yeah.
Mm.
Okay.
Okay.
Yeah, you see here, this overview shall give you in table form what are the differences between the primacy shareholder approach and the stakeholder
Mm.
focused approach. Yeah,
Okay.
in terms of function, in terms of purpose, in terms of responsibilities. Yeah, in terms of role for the shareholders, nature for the shareholders, and so on. Yeah, just that you see what is the purpose of the company. Yeah, maximizing wealth, whereas the business purpose, yeah, under the stakeholder is a set. Yeah, is set by the particular company's board. Yeah, that's more widely. It's also, yeah, it's about the purpose itself. It's not about just maximizing the profits or maximizing wealth. Yeah,
Mm.
yeah. That's here you see when it comes to ethical standards, yeah, whatever the shareholders want or obey, yeah,
Mm.
the law and fraud and so on, yeah, sometimes they intentionally take the risk. Yeah, they say, okay, we want to do business at any cost, and they, of course, they should obey the law, but that is not granted. Yeah, if they think, yeah, they are not detected to do something wrong, yeah, then of course it's not part of their ethical behavior.
Mm.
Whereas under the stakeholder, you should at any cost obey the law and follow the ethical standards. Yeah, and that gives you even extra credit. Yeah, as I mentioned in risk management. Yeah, here you don't get any extra credit if you behave environmental friendly. Yeah, if you voluntarily implement, let me say, a filter system. Yeah, over there, the filter system. Yeah, you do it because it really shows that you care about the environment. Yeah,
Yeah.
for example. Yeah, that's here just to give here a thing. Yeah, you see here in terms of role of management. Yeah, the shareholder. The management is just an agent for the shareholder. Usually, the shareholder they are wealthy individuals. They don't want even to spend their time in daily business and into organized business. They just say, here you have 1 million, 10 million, 100 million ringgit, and we expect that you make profit, do this and that business, and then they just give orders or goals which the management has to achieve, and that's it. Yeah, so they don't want, the shareholders don't want really to be involved in the business. Yeah. When you think about the stakeholder focused approach, yeah, then here they are behaving. Yeah, the management is not just to fulfill the needs of the shareholder. They are leaders. They are forerunners. Yeah, they are fiduciaries for the company and the shareholder. Yeah, so they are really interesting also to build a good reputation of the company in the general within the general public. Yeah, that's here the approach. Yeah. Yeah, you have here some points. Yeah, whenever it comes to a question, please contrast here the shareholder primacy theory versus the stakeholder focused approach. Then you can here relate to this table, and of course also in the exam you can draw up such a table. Yeah, just that you have to clarify what is meant by it. Yeah, just if short such short sentences is not enough. You shall really clarify, and at least when you give some bullet points, at least 1-2 sentence with this you qualify. So you what's okay, yeah, you give here some more details. Yeah. So let us now look into the agency theory. How the agency theory, this is also quite a popular question. Yeah, define here the agency theory. Yeah, what is good? What is a disadvantage? What are the costs about? How does it work? Yeah, here I also bring you a kind of chart which shall visualize how it works. Yeah, you have the principal. The principal is always the one in charge of the whole, as a shareholder owning a company. Yeah, and they employ, of course, an agent, and the agent are usually the directors. Yeah, and the directors, they are asked here to perform the tasks. Yeah, so the principal is also defining in a way the task which they have to carry out. You are in charge of carrying out this and that. Yeah, and the agent, of course, is accountable to the principal. Yeah, he or she shall do the best, what's in the interest of the principal. Yeah, it shall not be in conflict with the principal. But often, of course, we will see that the agent, the directors themselves, has an own interest, and that's where the conflict of interest arise. Yeah, because they are also following their own their own ideas, and they are not always the best interest of the principal. Yeah? But when you think about the tasks, the tasks are carried out on behalf of the principal, because the principal doesn't want to interfere in the daily business. Maybe they have stakeholdings in a lot of other companies as well, and then they don't even have time to deal with individual companies. Yeah, that's here what the agency theory is about. And the agency theory shall here try to avoid conflicts of interests. Yeah, you see, principal appoints the agent. Yeah, that is regarded as cost because the principal has to pay the agent a decent salary and also some bonification, some bonuses and so on. Yeah, and the agent shall act on his or her behalf. And the principal, moreover, it's not just enough to employ the agent. Yeah, usually it's also that the principal, if they don't have 100% trust, then of course they need to monitor their agent. And how is this done? Yeah, they engage here external auditors, yeah, who are looking into the performance of the agent and report directly to the principal. But that comes also at cost. So the agency theory is not without costs. Yeah. So we precisely speak here about agency costs. Yeah. You can also get an question. Yeah. Define here the major agency costs. Yeah, in the relationship between the principal and the agent. Yeah. And this fiduciary responsibility, that's also an inner core of the agency theory. Of course, the agent shall act in the best interest. Yeah, but yeah, and this is also regulated in a way by the company law, also by the memorandum of articles of association and things like that. Yeah, so you can define what is exactly the fiduciary duty the agent has to carry out. Yeah, that's giving here yeah an overview how it works. Yeah. So in practical sense, when you think about this fiduciary duty, then it definitely means, yeah, it comprises here the following points. Yeah, they have to make full disclosure of information. Here we have also this problem that there is an asymmetry of information. Why? Yeah, because usually it's up to the management whatever they disclose to the shareholder. Yeah, because the shareholder, they don't even know what's really going on. They are dependent on the reporting, on the information which they get from their agents. Yeah? And if the agents are not really integer, then of course they don't get the full picture, and then of course embezzlement and things, such things can easily happening. Yeah, often it's as I mentioned in the risk management course, some CEOs, they don't even want to disclose when something just goes a little bit wrong, because they fear about their own position. Yeah, if they do wrong, oh, maybe the shareholders, they can kick me out, and therefore they always try to give a nice picture. Very bloomy, everything is always bright and shiny, but in reality it isn't. Yeah?
Yeah.
But that shall not be the case. Yeah, that's according to the age. It's not in line with the agency theory. Yeah.
Yeah.
Of course, they have to report on all profit earned. Yeah, you know, some they try even to avoid here full disclosure, and they have here some extra ledgers where they even succeed to hide profits. Yeah. They shall avoid, of course, conflict of interest. Yeah, they shall exercise power here for the proper use. Yeah, they shall pursue here the interest of the company as a whole. But sometimes here exactly we have always a kind of conflict, because often the managers, they are acting on their own interest to secure their position, and even, for example, backstep their colleagues, or even cut down their subordinates, and this is not in the best interest. In the best interest would be that a leader, a manager, a director is also here empowering their subordinates and to develop them further, to assist them, to train them, but mostly the leaders, they don't do this, because then they think, oh, maybe this or that guy or lady becomes too clever and is then replacing myself. But in the best interest, it would be knowledge sharing in the company. That's what for example, the shareholders would expect. But knowledge sharing is not is mostly not really executed in the companies. They nicely write it on their homepages and on their documents, but in reality, it's not really lived that much. Exercise with skill and care. Execute here the shareholders' instruction. Keep confidential information or secret. Of course, if there are highly confidential informations, then of course they have to keep them confidential. If they are just in a status, let me say, of negotiating here a merger, then it's not necessary here to disclose everything, because that can even jeopardize the deal itself. That's here some ideas. You see here in the chart, it's quite summarized. The duty of good faith, the duty of care, the duty of loyalty. And it's about that you have here the relationship. And if they don't follow here the fiduciary duty, then of course a lawsuit, loss of credentials, criminal act, and ultimately even imprisonment can be the result. So usually, and that's also the same. In some countries you have laws, of course, fiduciary duty, but it is not executed in the same way as maybe in another country. What is in one country death penalty is in another country it happens. If you think about, I think in Thailand, one lady embezzled a lot of money, and she was sentenced then to death. In another country, we don't have death sentence.
We don't have sentence.
That's ridiculous.
In Malaysia, you get a pardon.
In Malaysia, you get the pardon, and then you are even knighted as a sir, because you are so clever. And if you share even with the king the proceed which you have stolen, then of course you
get even more privileges.
In another country, at least you get stripped off your titles and your influence, and you spend the rest of your days in prison. But also that, if you think that you keep someone 20, 30, 40 years in prison, that comes at the cost of the general society. And I have already heard, for example, a lot of refugees. They come with nothing. Then, for example, Germany is very inviting. They say, okay, come, we will help you, we will lead. And then they still commit a crime, because they see all the luxury and all the nice things, and of course they also want to have this. And then they commit a crime, and then they even say, if I go to prison, that's like. That's quite nice. I have a TV set. I have my own room. Everything is done. I get every day. I get three meals. That I would never get in Somalia, for example. So they are even happy if they are imprisoned in a German prison. Because the standards are different.
It's so unfortunate,
because here for such people, imprisonment is not a threat.
It's a better life,
It's a better life. You say it's a better life. It's a better life. Anyway. So then agency problem. What is an agency problem? Here you have all the relevant terminology in connection with agency theory. Agency problem, that's exactly the conflict itself, yeah, the conflict of interest in any relationship, yeah, here, what is expected, yeah, by the shareholders, yeah, the conflict of interest between a company's management and the company's stockholder. Yeah, yeah. Often, let me say that the management, they try here, yeah, to to grab some extra money for them, yeah, for themselves, yeah, and that's not in the interest of the shareholder, yeah. So agency loss, yeah, what is the agency loss? That's exactly defined as the difference, yeah, between the best possible outcome for the principal and the consequences of the acts of the agent. Yeah. So the principal wants that the management achieves a certain outcome. Yeah. But if this certain outcome is not achieved, all the difference is expected to be agency loss. That's also quite a very wide interpretation of this terminology. Yeah? Only if the agent would always consistently, yeah, follow the principal's interest, yeah, without any deviation, then the agency loss would be zero. Yeah, but I think that's hardly ever,
it's hardly
ever the case, yeah, because you have, of course, directors, and for example, if they have their own facilities, yeah, then they try to rent out the facility to the company at the good rental fee, for example. Yeah, that's already not really in the best interest of the company. In the best interest of the company would be that you get here a good, decent rental fee without any markups. Yeah, and which is, let me say, market in conformity with the market. Yeah, but ultimately really serves and doesn't provide extra income, let me say, for the directors, which might naturally create a conflict of interest. Yeah, because then the director would always say, yeah, first I come myself and then the company. Yeah, and not the other way around. Yeah. So what are agency costs? Yeah, agency costs, here we have the internal company expenses. What does it take here? Yeah, to cover up the agency loss and to deal here with the agency problem itself. Yeah, so whenever you have an inefficiency, whenever there is a dissatisfaction, a deviation, that is here all regarded as agency cost. Yeah.
Yeah.
That's here that you have all the terminology. Yeah, here that's just that you see here ownership. Yeah, what the shareholder, usually the shareholder has the ownership, and the board and the management, they carry out the control. So therefore agency theory is also about the separation of ownership and control. Yeah? And when we look into the theoretical academic background, the agency theory belongs to the game theory. Yeah? Game theory is here also quite an interesting business approach, but also an ethical approach. It is like this. Yeah. It really this theory really was a result of a trial where they give the participants money, and then they let them decide how to spend the money, whether to share the money, what to do. Yeah, and some they were very self-centered and just used it for their own purpose. Others they shared, and then according to this game, they arrived here at different outcomes. Yeah, and here the agency theory in terms of sharing would also be here part of the game theory itself. Yeah. Yeah, challenge. What is the challenge here? Yeah, it's the control of the management. Yeah, usually you place a management that you can say, okay, now I solved the problem. They deal with the running of my business. I need not to control them furthermore, because they are the last resort of control. Yeah? and therefore control of the management shall not be feasible nor required. But in reality, if the management, they are mostly the one who commit the crime, so I need to control them in a way. You see here, managers tend to act in their own interest because they want to maximize their personal payoffs. So it's not that the company is, let me say, in the first place, it's their income in the first place. And that's also, for example, how does this happen? This really happens almost in every company. When it comes to bonuses, bonuses are mostly related to the performance. Whether to achieve a particular key performance indicator. Let me say the return on investment must be 15%, the return on equity must be 25%, and so on. But with action, of drawing up the financial statements, of course, you can influence the result of the return on investment. If you let me say, keep the investment quite low, overall, and the profit is high, then you have automatically a higher return on investment. But that comes at the cost of the company because they don't reinvest old machinery, for example. Because the management say, the machinery is still working. Why should we invest? We have it already. We work with the old one. Then they maximize their income because they reach the key performance indicators. They get the bonus, and that's it. But in the long run, it's firing back. Just to have here some idea what is really meant, or what is behind just one such sentence. Executive tends to protect their status. Of course, you know how many CEOs, they are very self-centered, and they do everything to protect their status, that nobody can come just a little bit close to them, and endanger their status. So they defend their role within the company, and that comes at the expense of the company itself. Information asymmetry, that is also given. If the management is not disclosing a particular matter to the shareholder, then where shall the shareholder get the information from? It's the only source. And therefore, it's about how ethical here the management is, really to share openly all the relevant information. What can be a solution for this? Of course, we have a regulation for a fair and accurate financial disclosure, but the rules are just as good as they are obeyed. If the rules are not obeyed, then even the best rule cannot outweigh here the challenges. Accounting information, monitoring the performance of the managers, and that shall not be done or shall not be in the power of the management itself. It shall be done by an external party. An external auditor, for example, is evaluating, is monitoring the performance of the manager. You cannot let the manager control their own performance. That won't work. You can work with contractual obligations. In the constitution. In the memorandum and the articles of association, you exactly define what are their duties, what are their responsibilities, and so on. And of course, finally, you can implement some incentive schemes. Here, long-term, short-term incentive schemes to achieve the desired behavior of the management, that they are really following what you intend to achieve as a shareholder. That's here how you can deal with. What does accountability means? Here we have the directors. They are answerable to the shareholders. You know, in the annual general meeting, there is a voting that the shareholders approve the past year's financial reporting. If this is not done, then the management will not be released from their obligation. Yeah? That's here one essential point just to mention. Then they need, as I mentioned, to act in the shareholders' best interest and expectations. Yeah, they need to provide the complete, accurate, timely, and reliable information. Yeah, these terminologies, when it comes to a question in exam, you should really, almost, replicate by heart as it is given, because that is considered as as a definition, which you cannot alter that much. Yeah? Need to run the company with the required legal framework. Yeah. What is the consequence if there is no proper accountability? Then, of course, the shareholders, they may immediately take action to remove such directors. Yeah, but if you remove permanently your directors, then you don't have any stable management. If you don't have any stable management, the company cannot really perform. There must be a continuity. Yeah, so it shall properly work for not just 1 year, for several years. Yeah, separation of ownership. Yeah, you see here, of course, the ownership always remains with the shareholder. Yeah, they cannot delegate ownership here to the board of director. They can only delegate control. Yeah, that's here. To mention so far. Yeah. What is a company? Company in this case is a legal entity or legal person. Yeah. So the Sandrand per hat. Yeah, that's a legal entity. Yeah. So who are the members, shareholders who contribute the capital to set up the company and finance its operation? Yeah. Sometimes the members, the members of a company, that's also terminology. Yeah, the members of company is very narrow terminology. It only dedicates to the shareholders. Yeah, the shareholders, the initial shareholders, to be precise, they are the members of the company because they were the first contribute to the company so that the company could start. Yeah, who governs the company? Yeah, of course, human beings, and these are the directors and managers. Yeah, and here it's also dependent whether you have here several layers of management. Yeah, nowadays they always want to streamline. Yeah, that they keep also the layer of managers quite small, almost a direct line here to the subordinates with trying to cut off the middle management. That's right now quite a tendency which happens in most of companies. Yeah, here you have an overall chart illustrating how the agency problem is evolving. Yeah, so if you think about the startup, with a sole proprietor, sole proprietor, if he or she she owns the company and is also acting here as the manager or CEO. So if you have here one person summarizing several functions, then of course you don't have any agency issue. Yeah, because I don't think so that if you are the owner of the company as a sole proprietor and you run the business, then you embezzle yourself. That doesn't make sense. Yeah, so therefore no agency issue. But if you think about the risk, then the sole proprietor is exposed to unlimited, undiversified risk. Whatever happens to the company, will 100% affect the sole proprietor. That's what here undiversified risk is about. To take this risk, of course, here the sole proprietor or owner has a high expectation of return, return on equity. If they invest 100,000 ringgit, they expect within a year to get 30,000 as a return, because they bear the full risk. So the full risk shall also lead to high returns. And they need not to share any return with anybody else, because it belongs to them. But when we think that the business is growing, then of course the sole proprietor needs to fund the expansion of the company. Yeah? Up to that point where the sole proprietor can fund themselves, it's fine. There is no agency issue. But when you take out a loan, you use bank financing, or you approach business angels, you work with venture capital, then already this agency problem will arise, because the bank has an interest. The bank, for example, places covenants, only under the circumstances, for example, that you are able to fulfill the interest coverage of minimum 3, then you will get the finance, otherwise not. This is already influence to your business. And of course here the bank has also some say. With the venture capitals is even more, because they have a tough contract with you, under which circumstances they would invest, and how they want to exit the investment. Because venture capitalists and business angels always plan the step in and the step out ahead. And furthermore, if the company grows, then of course it might reach the size where they think, oh, now it's time to go public. That's the initial public offering. When the initial public offering is coming, then of course you have a lot of more shareholders or stakeholders, like financial advisors, like institutional investors, fund managers, the board of directors you have to install. And with this, really the agency problem is increasing. And on the same time, of course, you have to share your profit. So therefore, your return on equity is going also down as a percentage. Of course, absolutely you share. If you have a problem of profit of 100,000, and you have 3 shareholders instead of 1 shareholder, then each shareholder gets their part. But also the percentage is slightly going down because you have more cost. It's not that easy to reach a 30% return on equity in a stock listed company so far. And especially this is the return on equity based what the investors get back. What does the investors get? The investors usually get the dividends. And the dividend is dependent on the dividend payout. And usually if a stock listed company makes a profit of 100,000, they only issue, let me say, 40,000 as dividends, because the 60,000 they are plowed back in the company, they are held back, retained back in the company for future investments. So the investor, the owner, only gets the dividend, and here we have dividends between 3 and 8%. If you have 8% return on equity as dividends based on your shareholdings, then you can already be expect yourself as lucky. That's here to give an oversight of the agency theory. So now, of course, you can also criticize, because it's a theory. Theories always try to reflect the practice or the reality. Sometimes to a better extent, sometimes they lack. So therefore, also with the agency theory, we have some criticism. So that means the agency theory, to handle the agency cost and so on, it's costly, and it can also be quite ineffective. If you don't have the right tool here to monitor your management, then it might here be ineffective so far. So why it is costly? Of course, there is a residual loss. You always spend money here to fund the benefits for the directors and managers. And do you really get back what you expect from them? Yeah, for example, if you give them a bonus, yeah, and you give them even an advance payment to the bonus, you can hardly claim back. Yeah, you must really precisely define, yeah, what is a case when you can claim back bonuses already paid out. Usually, if you don't have a paragraph in your contract, yeah, which is dedicated this precisely regulating this, then you cannot claim back. Yeah.
Yeah, I don't think this ever happens in Malaysia. Like
Yeah.
bonuses is part of your, it's part of your contractual term sometimes. And then if they've already paid taxes on it. It's not possible.
Yeah. Yeah, they pay taxes, but just imagine, yeah, if you give them the bonus, yeah, and the bonus is given based on the financial performance of a particular year, and then suddenly, some 2-3 years later, you found out that already in the previous periods there were an embezzlement ongoing, yeah, because they window dressed the profits, and the profits were never that high. Yeah, because under each general accepted accounting rules, you have the room of choice how you evaluate, let me say, the assets and so on. Yeah. And if there is they find out an embezzlement, yeah, and based on the high profits shown in previous year, they get their bonus. But 3 years later, they found out this financial status was wrong. Yeah, then what's with the bonus? They were not really entitled to that bonus. Yeah, legally, of course, they would need to pay back because they were not entitled because they didn't fulfill that. Yeah. It's even the contrary. They created the damage to the company, not a benefit. Yeah.
Yeah, but how can you prove? Like, I think it's so difficult.
Yeah. For example, also in Germany, we had the case, yeah, of Wirecard. Maybe you heard about Wirecard. Yeah. This was a company, a quite fast growing company in the fintech industry. Yeah, and they expanded worldwide, also to Singapore and so on. And they window dressed their balance sheet so that they came up with assets. That they say, we have here some money in Singapore, in the United Arab Emirates, yeah, and that was billions, yeah, but they never existed. But the local management, they organized here confirmation letters, bank confirmation letters, yeah. So the banks, they were signing off, yeah, and this was clear embezzlement, yeah, because they increased here the values or created even values of the companies which never existed. And of course, if you have a high value, then this is reflected in a way it must come from, and it must also be evidenced as a profit. Yeah. So it must build up in a profit as well. Yeah. So, and that they found out just years later that they did this. Yeah. But all the previous years, the management get huge bonifications.
Did they manage to get it back?
The fraud came to light in 2019, 2020. Then, of course, the company went bankrupt, and now since that there are legal proceeds ongoing, still not solved. The CEO is, of course, in jail, yeah, but another, the COO. Yeah, because the COO was even more important, and the CEO was the one, orchestrating here this fraud. Yeah. Was escaping to Russia, and they could not find him. And he took also a lot of millions with him. Yeah, it's a bit kind of JLo here.
Yep, correct.
Yeah. Yeah, and
you cannot find him. He probably went plastic surgery.
No, it's not only plastic surgery, but if you go to a country like Russia, and they don't have a contract or a treaty where they exchange here suspects. Yeah,
Extradition.
yeah, extradition. Yeah, then yeah, you cannot
You
grab
can't, you
them.
can't pursue.
They can even maintain a internet profile and laugh you in the face. You cannot grab
You
them.
cannot do anything.
Yeah, you can only send an assassinator to kill them. Yeah, that you can do.
Okay.
Yeah, another fraud, which is just right now, or was popping up in 2024 in the real estate real estate sector, in Europe, was this with this how it's and here the managers, they embezzled Saudi Arabians. And
People?
the Saudi Arabians, they don't wait that long. They really send you a squad.
Oh,
And,
I mean embezzle Saudi money.
no, they did like this. They built the company, and then they were asked for investments, and they promised them a high return, the Saudis with their funds, they invested, let me say, 800, 900, 1 billion euro, and ultimately the company embezzled this money, and went then also bankrupt, and now the Saudis, they have difficulties to get the money back, and here in that case, the management is even happy to be in prison because they think that the prison is protecting them from the Saudis. Yeah, because if they would be free, then the Saudis would really attack them.
Yeah.
Because for Saudis, to be embezzled is not just about the money. The money is not the crucial thing. It's about that they lost face. Yeah, it's about losing their reputation, and here they are very sensitive and very let me say,
Revengeful.
they are very vengeful, because they are usually very proud of that. Yeah, and if you take them, they are proud. Yeah, then you have a severe problem.
Yeah.
That's here. Yeah. So residual loss, bonding costs, cost of payment, here the directors and executive management, and the monitoring costs. These are here the components of the cost. Why ineffective? Because you focus exclusively only on shareholder values. That of course lead to a kind of short-term short-term objectives. Ignores the interest of the society. It's good for the shareholder, but not necessarily good for the rest of the society. Just imagine, if you have a chemical industry, the chemical industry produces at any cost without protection of the environment, and they don't use filters, water filters, and cleaning devices, water waste treatment equipment, and so on. And then some hazardous water is released to the environment and is here polluting the groundwater or the drinking water. And the society, or part of the society, people living close by, they become sick. The shareholder, they don't have any problem, because they have their profits, and the negative consequences of doing business has to be borne by others, by the general society, by the sick people. And often, if such things happens, then there is also a kind of endless dispute ongoing in front of court, because it's always about, can you really prove that this damage is caused by the company? How did they really release these hazardous chemicals or not? And there is often no compensation paid to such people. Them here be negatively affected by the outcome. That's here why we can say here it's ineffective. Agency theory shall also include here the stakeholders. Limited access to information. the information itself, when it arises, when it is a result of the business activities, remain with the directors and the managers. Only if they share, it is accessible to others. Of course, we have regulations that they have to publish certain things. But if they forget or whatsoever, or they alter information that you cannot really check. The executive management ultimately controls the company, not the shareholder. The shareholder is a bit too far away of that. So, conflict of interest, you see here moral hazard, managers inclined to focus on maintaining here the own benefits only, level of efforts. Managers tend to shirk that may result in low profits, earning retention. Managers inclined to focus on business expansion only to realize their rewards. Not always the business expansion is the best. You should grow a company in a sustainable way. There are also some, if you look into some history of companies, then they were growing very fast. They did one merger after another, and they financed it. They leveraged here the finance by external debts. And ultimately, what was the result? They couldn't really generate the synergies expected by the merger, and then they end up in bankruptcy because all the system implodes. If you buy as a company, let me say your company has a size of 100 million ringgit, and then you buy another company for 70 million, and then another company for another 70 or 8 million, and then you grow, you double in size. But that needs to be digested in terms of organizational setups, and often such companies, they don't take care about the organizational setup. It's just about to show the figure. Now we are double in size. Now we grow by this and that percentage. Now we doubled our profit or whatsoever. But that might lead very fast to the so-called implosion of the companies because of the expansion. And here the managers, they say, if it's a bigger company, then of course I'm entitled to a higher salary. Therefore, this grows hysteria, I would say, is often very predominant under managers. Time horizons, often the managers, of course, they say, okay, if I'm appointed to CEO, then maybe I have a contract for the next 3 years, 5 years maximum. I don't know what's happened afterwards. If it is not extended, then you have to leave. Because nowadays in the Western companies, they terminate here the mandates for the C level just for 3 years. So therefore, they try, of course, to maximize their income within these short-term, short-term, and they don't look into the long-term. That might be such conflicts of interest. Balancing the needs of the corporation. Whose needs are to be balanced? That's the first question. Of course, shareholders, controllers, directors, stakeholders. Who is required to do the balancing? The controllers, but they don't have the needs to, and there is a conflict of interest. The board, the company secretary. You see here, when it comes to the balancing act, the balancing needs between the different stakeholders, then here the company secretary plays also some pivotal roles that they shape here how to find a good compromise between the interests of the different parties in order to avoid here an escalating conflict. What are the challenges? Those needs are conflicting so whose needs must be given priority? Yeah, that depends on the philosophy of the company. Of course, shareholders and stakeholders largely rely on the controllers. Yeah, the interest of the shareholders mostly are given priority. You know, the stakeholder mapping is helping here. Yeah, it's depending on the influence and the importance of the shareholder or of the stakeholder, how you deal with them. Yeah. And here, of course, sometimes we have in reality the issue that information might be suppressed. Yeah, they change information, they manipulate information, just that the truth is not really come to light so far. Yeah. And also shareholders and stakeholders, they on their own may also make wrong decisions. Yeah? If they are just focusing on growth, then they are focusing in the wrong direction. It's not about growth; it's about sustainability of performance. Yeah, and here also the performance. It's not the P&L performance in terms of profit. It's about sustainable cash flows. That's really securing the company in the long run. In the long run, you must always look after a good cash flow, a positive cash flow. That's what's keep the wheel running. Balancing here, role of corporate governance. Yeah, you have conflicts, and you try here in terms of to define what are the problems about, and to deal with these problems. Yeah, that you find some solutions or some approaches how you can deal here with these problems. Ultimately, it's always about you should try to make everybody happy in a way, so that there is the so-called win-win situation. That shall be here ultimately the goal in order when you deal with conflicts and when you handle here governance problems. Even in the latest, in the most recent time, there were more theories were approaching. Yeah, so we don't have just the shareholder approach, shareholder value approach. Yeah, meanwhile, we have the enlightened shareholder approach, which is an extension to the shareholder approach. Then, of course, we have the stakeholder approach. And we have, meanwhile, also the inclusive stakeholder value approach in terms of good citizenship. Yeah, so that approach goes far beyond just stakeholder and shareholder. It's really about to implement here ethical behavior in terms of being a good ethical citizen. So that you contribute in the first run to the society, and in the second run it's about individual wealth. Yeah, but that's nice to have. Yeah, in South Africa they implemented this with the King's Act, King's 5 Act or so, and even they struggled, although it's already implemented here as a kind of law, or as a law. Convergence approaches, that's here an approach in between. You see, shareholder, it's always about maximizing here the profits, maximizing here the value for the shareholder. Here it's also about the economic value added, which is here the most or the top key performance indicator, economic value added. That's showing whether the company is really generating value or destroying value. You see, it's about you have the target gaining value, shareholder value. So therefore, how to increase the sales, how to increase the earnings, how to increase the free cash flow. It's not just the operating cash flow. Ultimately, it's about the free cash flow. What is the free cash flow? The free cash flow is the cash flow after you have already invested here. You carried out reinvestments in assets. and also it's about that you cleared all finance cash flows. For example, repayment of loans. And what is left is then the free cash flow, which you can really use for whatever purpose you want. According to the statutory laws of your company. And these are the drivers, to increase the dividends and the capital gains. Capital gains, of course, also are increased if you are a stock-listed company or a share capital company. Then it's about the share price of your company. As a stock-listed company, it's easy. You will always, you can always track it on the stock exchange. But with, let me say, private share companies, you have to do an evaluation of the company, and accordingly, you can evaluate what is the share value. Of the share price of your company, and what's the company worth. Whenever you follow here the shareholder approach, of course, it's about the strategic decisions. The strategic decisions, they are shaping ultimately the operational decisions, and the operational decisions ultimately shape here the performance of the company. You see, net cash flow, it's important. Here, it's also, you have to look into when it comes to the value. It makes a difference whether you are financed, let me say, by 80% equity or 20% debt, or the other way around. Discount rate plays a role. You should look into what is going on in the future. The prognosis horizon. Which assets you need, which capital costs arise. And therefore, you then decide whether to fund your company externally or internally, which investments you are carrying out, what is the financing about. That's all here, how you can achieve here a high shareholder value. And here, it's also to mention, often the shareholder value is realized in terms of repeatedly short-term optimization. And often this comes at the expense of the interest of other shareholders. Because maybe the main shareholders, they want to maximize the profit by short-term optimization. Whatever business, whatever profitable business you can grab it. That's the philosophy behind. But there might be also other shareholders. They are really interested in the long-term sustainable growth. And to realize this, of course, you need here the extended shareholder approach, or the other approaches which support here that much better. You see, the board, of course, they are accountable to their owners only. Successful companies maximize the profit. That's the common view. The shareholder groups needs to be treated fairly. Of course, the stakeholder groups, you treat them fairly, but their rights are quite limited. They don't have that much saying. As a customer, for example, you cannot really influence. You can lodge a claim, and the claim will end somewhere in nirvana, and that's it. Of course, they give you the possibility to raise your voice. But whether the voice is really heard or not, that's written on another page. The company law provides some protection for the shareholders. Then, of course, it is dependent what is written or what is defined in the memorandum of articles of association. That's because that's the prevailing one. Whatever, and of course, the articles of association must always be in line with the company law. But the predominant or prevailing regulation is always the individual one. So if you have here more tighter rules, then of course they are applicable. But usually a lot of smaller companies, especially, they don't even have such things as an articles of association, because they say, we are following the company law, and in the company law the elementary things are regulated. Then just that is applicable. So what is the enlightened shareholder value? Yeah, here it's a wider perspective, and here it's not just that you predominantly focus on the financial value only. Yeah, you see here the shareholder value from various perspectives. Yeah, the chart illustrates in quite a good way. Yeah, it's also about the operating value dimension. Yeah, it's about the employee, the community value dimension. It's also about the customer value dimension. So therefore, it's really here about that, for example, the company is looking also, are the customer, how can we really satisfy our customer and win them as a regular customer. Yeah? So that they put on an ethical profit margin, yeah, so that they don't slaughter them, that they really provide them with a product which at least serves some reasonable time. Yeah, nowadays most companies, if you buy any goods, yeah, then you don't have any warranty, or maximum a warranty of 6 months or a year. Yeah, and suddenly you find out when the warranty is expired, suddenly also the good is already showing some damages. Yeah, because they intentionally built in the technical obsolescence. Yeah, and that's not really ethical, but they do this because then they have repetitive business. Yeah, for example, if you take the water heater, yeah, most water heater in Malaysia, yeah, if you are lucky if they work for 3 years. And then you have to replace it. It's not that much money, yeah, if compared to a really full size heating system. Yeah, a heating system is for sure more advanced and more sophisticated. Yeah, it's quite easy, and therefore it's cheap in a way. Yeah, but if the elements for the heating is made of plastic, yeah, how long do you think that this plastic is lasting if it is always on every day heated and heated up, and then it's cooled down? Yeah, of course the plastic will really break, yeah, within shortest time. Yeah, that's already planned. Of course they could make it out of copper, but that's too expensive already. Yeah, so therefore they produce garbage in a way, yeah, which you have to replace within shortest term. And the enlightened shareholder value goes beyond this philosophy, because they say, hey, we want to have really a customer who is satisfied, who is really trusting in our quality. It's not about slaughtering them and selling repetitively the same garbage again. Yeah? And they also listen to the customer. Yeah? If the customer have a complaint, then they collect all the complaints and try to develop their product further in order as an answer to the customer complaints. Yeah, if they complain that this is leaking, then they find out what is the reason of leakage, and then they improve really the quality of the product. That's here some ideas. Yeah, and here the enlightened shareholder value that shall here promote the long-term success. Yeah, because we don't. Yeah, the philosophy is we don't want that the product is coming back. We want that the customer, for example, is coming back as a repetitive customer. Yeah. And here it's also different. Yeah, when you think to Western countries. Yeah, in Western countries, they offer warranties, for example, for cars. Yeah, that here the chassis and the engine and things like that working properly for 10 years. I have never seen this in Malaysia. Yeah, that you get really such an extended warranty. Yeah? In general, the customer protection law in Western countries is much tougher and tighter than you find it in Asia. Yeah, in Asia, it's your risk. You buy the product. If it breaks down within shortest time, it's even the fault of the customer because wrong decision.
Yeah, if you want extended warranty, you pay for it.
Yeah. Then you pay for it. Yeah? And if you have really an issue, and then you want to to have the replacement, then they suddenly come up and say, "Now this is not covered with
Yeah.
your extension." Yeah?
So
So it's just to slaughter wherever they can the customer, and it starts already here that the customer cannot influence even what they get. Yeah, they cannot say, "Hey, can you alter this or that? I want to have this or that. Do you have this?" Yeah, if you have some
parts are
special
not, yeah, the
requests.
parts are no longer in production, so you can't even
Yeah,
replace the parts.
yeah,
So
and
the
that's
extended warranty is probably no use.
the extended warranty is for them an extra income source, an extra income stream. So it doesn't even make sense to take out this extended warranty if you have to pay for it. That shall be included as really evidence that the companies come up with a proper product quality. Okay. Yeah, you see here the enlightened shareholder value is adopted in the UK. Yeah, here they should pursue wealth maximization and at the same time take care for the welfare of the stakeholders. So it's not just shareholder wealth maximization, it's also that they have to take care how we serve all other customers as well, that they are not negatively impacted by our business. Yeah, take into account also the decisions on stakeholders. Yeah, so whatever the stakeholders decide, it shall here also be respected. Yeah? But this is still not supported by company law. So therefore, this enlightened shareholder value is available or is published here in UK, but it is not mandatory. So if you don't have a mandatory things, we know it is not really followed that much. Some companies they do it on voluntary basis because they use it then as marketing tool as well that they can point out. But it is not here backed up by law. And there is not really a guidance how the directors should adopt this approach. And especially when the economy is not performing that well, then just the core interest of wealth maximization will be the dominant one. All other interests which can come up with extra costs are just neglected. Then here, that's the stakeholder. Yeah, here you see just the overview. What are the external, what are the internal stakeholder? When it comes, this chart shall be before there is an error in the order of the slides. You see here an overview of the stakeholders, internal stakeholders, external stakeholders, and you see also who came up. Freeman, he came up with this idea of the stakeholder approach. You involve anyone who is invested and involved or affected by the company. These are the passwords. Who is invested, involved, or affected by the companies are regarded here as part of the stakeholder ecosystem. Should not. What are the ideas? Should not focus on maximizing of shareholders only. Recognize the rights of other shareholders. Also affected by the consider here also the stakeholders who are affected by the decisions, and there should be a balance between economic goals and social goals. That's here the most important topic. But the problem is the company law doesn't even mention stakeholder. They have only shareholder value approach. Stakeholder value approach you won't find as a terminology in law. And therefore you cannot really enforce it. So it's nice to have nice idea, but reality is different. That's here. Yeah, some welfare provided in other legislation, adopted in civil laws in some countries. Yeah, but also not in all countries. Yeah, because just imagine if you are negatively affected by a chemical industry as an individual, how hard it is to fight in civil law against such a company as an individual. Yeah, because the individual, they have the better, more educated lawyers, they have more money, they can always postpone the whole procedure to, we saw it we say it in German, to the Sankt Nimmerleinstag. So endless, yeah, and therefore, as an individual, yeah, you just can give up.
Yeah.
So when you think about this inclusive stakeholder approach, in South Africa, they, after the apartheid regime failed, and they renewed here the law. They also implemented here some guidelines in terms of corporate governance, and that's the South African King 3 report. Yeah, and here it's about that. It firstly mentioned this terminology of being a good corporate citizen. Yeah, that's here exactly the terminology. Good corporate citizen, and therefore you should consider here the legitimate interest and expectation of all key stakeholders. Yeah, of course, and here the shareholders are not the utmost priority. So, and according to this act, the directors, they are not only accountable for or accountable to the shareholders, but also accountable to the stakeholders. Yeah, so they have the same fiduciary obligations towards employees, towards the customers, towards the public authorities, and so on. Yeah. And here, do you have any questions?
Is that working well? Do we have any results yet? Or not yet?
Let me say, in South Africa, most companies or a lot of companies, they are in a kind, also linked to the government. Yeah, so here, I think, as long as there is not any corruption ongoing, it should work quite well. Yeah,
But they are very corrupt.
you don't achieve 100%.
Yeah.
That's not possible. But it really works in that way, that they really try here to find a good compromise with all involved stakeholders, and because here the influence of the government is quite high, it is in a way also enforced.
Okay.
Yeah, because after the apartheid regime was kicked out of the country, they also rearranged here the private property. So a lot of the huge farms which were owned by Western Netherlands immigrants from Europe, in South Africa, and who run the apartheid regime, all these properties were confiscated, and then it was in a way given to the general public, and they rearranged it as government linked companies, and therefore there is a huge influence, or a much bigger influence, in business from the government, and so it's working. Yeah, but to which extent, and but also with this approach, you cannot really completely avoid any wrongdoings, or any embezzlements and things like that, because wherever people are working, such things happens. Here there are also different approaches to the communication. Here rule-based approach instills here that you really follow the law meticulously, and if you don't follow immediately, penalties are the consequence. Another approach is the principle-based approach. That's Here it's free. Yeah, it's a bit more flexible there, because you just need to adhere to the inner core of the principle itself. There are not just stringent rules or codes or laws applicable. It's about the principle which you have to follow, and then you can interpret it. Yeah. Either you comply completely with the code, because the code itself, of course, it is given, but you can also explain why you alter here the this code accordingly to your individual needs. Yeah. In Europe, it's mostly principle-based. In Asia, US and UK, it's a lot of rule-based. Yeah? Especially in the United States, they like to regulate every in a meticulous detail. Yeah, yeah, that's here some ideas. Yeah, convergence of approaches. That means that three different approaches, yeah, which we have here discussed so far. There is nowadays a trend that yeah, we should integrate them all together in just one applicable code, yeah, one applicable theory, and that shall be really rolled out on global level. Yeah, there is an initiative that governance shall become a more dominant role, but of course this cannot be just driven by individual no, by individual countries. Yeah? That must be driven by a supranational entity like UN or like OECD. Then they can really come up here with such rules and regulations. But nonetheless, for example, if the UN, yeah, the UN issues directives, yeah, if the directive is not implemented in that country, yeah, then it's nice. Yeah, it's a good good guideline. But if the country is not approving, yeah, then it's worthless. So therefore, this enforcement can only take place, yeah, if, for example, a supranational company, supranational entity like UN works closely together with the individual governments, and then they roll it out and implement it in local law. Then it works. Yeah. Yeah, you see here, yeah, this in best interest of the shareholders, that would be then even extended in the best interest of the stakeholders. Yeah, yeah, it is here redefined as the long-term sustainability. It is in the best interest of the long-term sustainability of the company. That's here what this stakeholder, this convergence of stakeholder approaches is here about. Yeah, yeah, that's here. Yeah, otherwise, I don't think so. That you just need to mention that there is a convergence ongoing in terms of approaches, and that they want here to establish at the supranational level one standard, and of course then the individual countries, they are invited here to adopt, first to adopt and then to adapt here the according principles. Yeah. Yeah, some countries, they tried here to implement here, or to go here a step beyond what is best practice. Yeah. Okay. Yeah, what are the principles? Here you see the overview of the principles of good corporate governance. Yeah. First of all, it's accountability. Second is transparency. Then we have the shareholder consensus. We have fair management. We have responsiveness. Yeah, these are and the integrity. These are the six main pillars. Yeah, in the book it is mentioned responsibility, accountability, transparency, fairness, and independence. Yeah, that's here the principles. Yeah, and the principles, they are already a result of G20 OECD countries. Yeah, G20, you know, the most important or the most powerful 20, the most economic powerful 20 countries of the world, and here the organization of the economic development. Yeah, that's here they are publishing here some guidelines, and here you will find also the essence. And when you think about the Malaysian governance, corporate governance code, then this is a kind that they take here principles, of course, of OECD. Yeah. I have also given you here the link where you can find here the details of the OECD, so that you can really dive here very deep, in details if you want to. Yeah, you see here each principle, just a short sentence. Yeah, responsibility. What is responsibility? Having authority over something, and to be, you are liable. Yeah, you are held accountable for what you are doing. Yeah, in the exercise of the authority, whatever you do, you are responsible for it, for the outcome, for the impact, for the effect, and therefore this liability can go very far, or can just be on the surface. On the surface, if you are just accountable, let me say, against the shareholder, if the shareholder don't take any legal action, then nothing serious happens to you. But if it is deeply embedded in the local business law, then it can have severe consequences if you don't act responsible. Then you go for prison, or you end up even head off. Then it's about, you need to carry out the business in a conscious way, and with a really good personal attitude, personal behavior. But also, when you think about personal behavior, good behavior, that's a terminology, how you interpret it. Different people interpret here good behavior differently. For someone who sticks already, let me say, to the law, it's already good behavior. For others, it's really that they take care of others, and let me say that this behavior also includes here really an outstanding ethical behavior. Not just because something is prohibited by law. You should follow beyond. For example, to just to kick someone out of the company, by using some force of negative behavior, that you, how you say it, what is the terminology? If you now I don't get the word, the right word.
To kick someone out of the company, like to.
No. Just right now I had the word, but now I forgot it. Now, if you bully someone, if you
to vote, you mean to vote out, or to?
No, it's a kind. You put pressure on an employee, but you don't do really something wrong. But you
Constructive
push them out
dismissal.
so that they give up. You bully them out. That's already bad behavior. That's not a good responsibility. You should, but it is not prohibited by law.
It's not. It's not. And it happens a lot. It happens a lot.
It happens a lot, but that's a kind of misbehavior. So if you really take responsibility serious, then you must act like this. You hire an employee. The employee is onboarding. The employee has decided to devote their work, their knowledge, their attitude to the company. Maybe they even have to commute a long distance, or even they have to relocate. So you are responsible in a way for their life. You cannot just say, I hire you and then I fire you. You have also here a responsibility. And especially when you look into the COVID, what happened in COVID, that's really ridiculous. They laid off a lot of people. Just to bring down the cost. And frankly spoken, some not even 1.5 year later, everything goes back to normal, and then they had to rehire. But of course, then they rehired and said, now you are eager to find a job. I only give you this and that salary. But that's really exploitation. That's not ethical behavior in terms of leadership, in terms of management responsibility. But this is not really anchored in the heads right now. They always have this hire and fire mentality, always in the short run. And if you analyze now the results, what happens with the companies during COVID, with this firing and later on hiring back again, the costs overall was even quite higher, as if some clever companies, they did it in that way. They say, okay, now we have COVID, we don't fire our people. This is a good time to look into our organization, and we do internal upgrading. Then they have time for tasks to be carried out, which couldn't be carried out during very busy times. Because regularly you are always busy. It's always about making money, executing orders and so on. Then you don't have time to think about how you can reorganize your organization in a better way so it goes more smoothly, what you can improve in terms of continuous improvement activities and so on. Some clever companies, they did it. They exactly used this to upgrade their organizational setup. Others, they just acted like this. Now I have problem with my turnover, with my profit. What is the easiest? To lay off people. Frankly spoken, I really discussed such managers insofar as this is, in my opinion, not even management. Management is about really, to build an empire in the long run. And when you decide to hire people and you got already a good impression, why you should lay them off? You really lose talents when you do this. And also, when someone becomes older, then kick out the old people, because but they can be trainers within the company. Of course, this is a very idealistic approach, but if we don't establish that approach, in the long run, we will really destroy our business environment. Because if it is everything just about greediness, what happens? Ultimately, it happens that it comes to a bubble, and the bubble bursts, and then we have a huge financial crisis once again. Accountability, of course, it is that you are answerable to the consequences, whatever you do. But usually this accountability has also to be sharpened. If you lay off people, which is just for the sake that you improve your profitability from 1 billion euro to 2 billion euro, then you are damaging the society. You are not doing a good service. Because if it is just maximizing the profits, and the profits are not then even reinvested in that particular area or company, then it's just draining here money out from the public, from the general customers. Therefore, the accountability as a terminology shall also be widened. You are accountable also to the society, and to the society should be given here enforcement, that they can really take action. Just imagine if you lay off hundreds of people or thousands of people in a region. Just imagine. We had just recently a case in Austria yeah, where the company, mismanagement of the management was the reason. Yeah, wrong decision making. Yeah, they were just already in such hemispheres with their profits that they didn't. Yeah, they were not earthbound anymore. Yeah, and then they make decisions which completely were out of mind. Yeah, and that led then to a downfall of that company, and this company had then to lay off 2,000 or 3,000, 2,000, more than 2,000 people. Yeah. Yeah, it's not just about the 2,000 people. There are four minimum. Yeah, these are 2,000 families. Yeah, there are children affected. There are spouses affected, families affected. It's not just about that figure, and that is even influencing, let me say, the whole business infrastructure. All sub suppliers are affected. Yeah, then they just intentionally went into bankruptcy. So they declared bankruptcy. Yeah, what happens with bankruptcy? They say, yeah, now either you waive our debts, 80% of our debts you waive, or we just close the company at all, and then even 6,000 people are laid off. So what do you want? Yeah. So they already, even in the case of bankruptcy, they were very demanding. Yeah. And then, of course, even the government helped them and said, okay, now please, we give you some backup to find a buyer so that the business can go on, and that at least that we can rescue another 4,000 jobs. Yeah, and. Yeah, what happens then? They push through this insolvency procedure with the waiver of 80% of the debts, and ultimately nowadays, they published the new profit, the new financial statements, and they showed a profit of 590 million euro. But for this 590 million euro, they laid off 2,000 people, and they still struggle here to find a replacement job. Is this ethical? Is this good governance in terms of enlightened stakeholder approach? No, it's not, because it creates much more damage than you can ever imagine. And afterwards, you have a profit again immediately. So, for which sake was this done? It's just for the sake, of maximizing profits by even using the means of going bankrupt. And if the law allows that, then this will continuously go on. Yeah, and then the other companies, they see, that's a good business model. Yeah, I can never make a profit of 80% in one shot with ordinary business. 80% is real profit, net profit. As if I do such a Chapter 11 procedure.
So it's like it feels like it was deliberately done.
Yeah, they were orchestrating this whole procedure, and ultimately at the expense of 2,000 employees. Yeah. And just imagine that's a small village or whatsoever. It has a consequence. Yeah. And if it is in a regional area, then a lot of other businesses also are affected by this. Yeah. And then the spending goes down, the wealth in this region goes down, and then of course some poverty is arising. And on the other hand, you have some 4 or 5 guys. They become ultra rich because they just laugh about. And if law is supporting such procedures, then the law is wrong. You understand? But the law is above all. You understand? It is always said law is above all and law, yeah, but in this way, law, yeah, there shall be justice, but law is not bringing justice.
Yeah, because the discretion is too wide. It's very difficult to enforce. It's one thing to say that, oh, there's a breach of director's duty, but who is going to sue? You know, director's duty, only the company can sue, but the company is not reasonably going to sue its own directors.
No,
It's
yeah,
yeah, as
because
shareholders.
the same directors are, or mostly the same, let me say 80 or 90% of the same directors who orchestrated this procedure are still now working or continuing here the business. Yeah, what's this? Yeah.
Yeah, not easy, cannot sue.
It shall always be in the best interest of the general public, yeah, and in the best interest of all stakeholders. That shall be, yeah,
Yeah.
and of course you need to make a profit, but an ethical profit. Yeah, an ethical profit is, yeah, if you have enough, let me say, to reinvest and to build some reserves, it's okay. But you need not that we have ultra rich people having billions, and then we have billions. They don't have even one ringgit. That's not correct. Yeah. And that always leads to conflicts, because if the people don't have here a decent living, the possibility for a decent living, then it's not working. Yeah, so therefore, corporate governance shall go in that direction here to enforce enlightened stakeholder, a shareholder value, or the stakeholder value. Yeah. Transparency, yeah, transparency. You should really come up, what is the true and fair view, yeah, and here all means forecasts, press releases, updates, yeah, all shall be made transparent. But if you are a private run business, yeah, the transparency is a different one. Yeah, you are not forced to publish this. Yeah, so that here any interested parties can get information. Yeah, just imagine if you want to work with a private, a smaller private company. Yeah, it's tricky to get here information what is really the financial status of the company about. Yeah, because it is not generally accessible. Yeah, there is no report which you can just download from the stock exchange and then have a look into, at least that you have an idea what's going on. Yeah.
Mm-hmm.
But of course, this would be necessary if you want to engage with such a company. So transparency is here needed also to secure here investors, that they have a better understanding and better trust, yeah, and that they can make a clear decision to which extent that they will invest here. Yeah, fairness, yeah, impartial and unbiased, yeah, with a sense of equality. Yeah, equality. What is equality? Yeah, for some is equality this and that. This and that ethnicity comes first. That's already equality. Yeah. Action and decisions must be balanced. Yeah, that's also a bit corporate governance. It is pushed, yeah, here by supranational entities, really to increase here the ethical behavior. But yeah, as long as it is not really mandatory, it's a bit toothless. Yeah, that's yeah, sorry to say it. Yeah. Then independence. Yeah, free from personal influence of the top management. Yeah, therefore you install the independent what is this? Independent
non-executive
directors. They are coming from the outside. They are not on the payroll. They are paid for participating in meetings and pointing out what shall be improved. Free of conflict, of interest or personal motivation. you cannot avoid this. Yeah, otherwise you have really to clone directors and yeah, to fabricate my directors that they have only interest for the company, but that's really possible.
Yeah.
Integrity, steadfast adherence to strict moral and ethical codes. Yeah, nice to have. Highest standards of professionalism and probity. Yeah, of course, you should be professional when you carry out your job, yeah, so that you have the academic or educational background, the training background to do so. Yeah, straightforward dealing and completeness. Yeah, here that these principles are highly defined by the different reports. Yeah, for example, the Cadbury report. Where the evolvement of corporate governance is coming from. Probity, honesty, not lying, cheating, stealing. Yeah, usually it shall be like this. Whatever you don't want that happens to you, you should not do to others. Yeah, that is this categorical imperative of Immanuel Kant that was already defined in the 1700s. Yes, now or 1800s, because it was 17 something. Yeah, and he already defined this, yeah, as a leading guideline. That foremost says everything. Yeah, because you should always be aware whatever you do to others. Yeah, it might come back to you, and then I don't think so that you want to be exposed to that. Yeah, but mostly the powerful people, they don't care about, they think they are immune to that, and then they can do whatever they want. Yeah, yeah, that's about the ethical. Yeah. So reputation, yeah. Overall, the directors, they shall also contribute to a positive reputation to the company. Yeah, yeah. When you think about Apple, yeah, they behave here in a way. Yeah, when you think about Steve Jobs, yeah, he tried to be the role model of the company itself. Yeah, and what happens? Yeah, they admired him as a leader. Yeah. Where do you see such a strong leadership where they really admire? He didn't force them to admire him. Yeah, they admired him because he was really that visionary, that leading personality, keeping here a close eye on the developments, what's going on in the company itself. Yeah. Judgment, yeah, ability to communicate meaningful conclusions. Yeah, you have to evaluate various business issues. Yeah, not one way necessarily is the best way. Yeah, so you should always think in alternatives. Yeah, you have to evaluate these different alternatives. Yeah, you have to make the decisions, and you have to anticipate the outcome of your decision. Yeah, because that shall ultimately trigger your decision making. It's not about always just the figures. Here I see the figure. The figure says this is gives me probably the most profit. I go for it. Yeah, you should see it in a holistic way. What are really the consequences of your decision? Yeah, and then when you take that's then a good judgment. Yeah. Non-judgmental approach to business and personal relationships. Yeah, you should separate here. Yeah? What is business, and what's private shall be private, and don't mix it so far. Yeah, reputational management here. What drives corporate reputation? That's a lot of things so far. Yeah, we have here the strategy and leadership. Yeah, that shapes a lot how the company is seen. It's about the integrity and transparency. Yeah, if the investors or the stakeholders have trust, then of course this corporation will definitely have a good reputation, because they say, yeah, what they are coming up is solid. Yeah, they make good decisions. They give information and so on. Social responsibility. Yeah, of course, highly liked by the general public. Yeah, that the company is also investing in some advantages, things for the general public. Yeah, for example, they fund some hospitals. Yeah, they come up with kindergartens and so on. Yeah, for example, in Europe, I have never seen a company here. I don't know whether you can correct me, but in Europe we have a lot of companies. Meanwhile, they offer. So if the company has a few thousand employees, they automatically offer a kindergarten, that the staff can bring their children along to work, and
No
they
such
are
thing. No such thing.
no such thing.
Yeah.
They have meanwhile also their own academy. Yeah, so that they also take care of learning and progress here for the staff, and that works in that way.
I have
That
only seen one, actually. I've seen one. There's a
Yeah.
factory. So it's a factory setting where they have workers who have families. Yeah. So the workers, there are a lot of women. So they can't
Mhm.
they can't go to work if their children are not cared for. So
Yeah,
they set
yeah.
up a private kindergarten, but
Mhm.
outsiders, it's mainly for the company's staff.
Yeah,
But
yeah.
outsiders can also send their children in, so they get money that way.
Okay. Now
Mm.
it's what's in Europe is you have the premises of the factory or whatsoever, and then there is a separate building
Mm.
also run by the company. Yeah,
Mm.
and there is then the kindergarten with all the amenities. Yeah, with playground and also they feed the children, they take care, they supervise them. It's really full service, and
Mm.
that comes free of cost.
Yeah,
Yeah,
so the
they
company,
just
it's good for the company because then the mothers have more time and more
yeah,
assurance and they have more
exactly.
income. So
Yeah,
I
yeah,
think it's
yeah,
good.
exactly. And it's easier for them to bring the children. Yeah, then they need not to rush in the morning to one place where the kindergarten is, to the other place where they are working, and then rush back. So it's a lot of easier their life. Yeah, and that's
Mm.
intentionally done. And almost all bigger companies meanwhile do this. Yeah, yeah.
Yeah, but my company doesn't.
And
And my company is a lot bigger, like really a lot bigger than most companies.
yeah.
Mm.
uh, yeah, if they are not if they don't have this aspect of social responsibility, they don't take care about. Yeah, and also about learning. Yeah, here you have to pay for your education, and it's quite costly. Yeah, and if you
Mhm.
want to upskill yourself while you are working, yeah, then it's not granted that you get here some days off for proceeding your learnings. Yeah,
Mm.
in Europe, they really do it on a dual basis. Yeah, they even say, okay, then we agree 3 days a week you work, and the rest of the week you learn. And they have their own academy, and it's also quite convenient. Yeah.
Mm.
And then they even shape, let me say, what they are learning is highly practical. It's not a theoretical learning. It's always about the application of knowledge. Immediately, yeah, applied what you learn, what's your new, your new knowledge is about. Yeah. Here they are really quite advanced. What this is about. Yeah. Yeah, work environment, of course. Yeah, work environment is also that you have here a nice environment, that you have also some kitchen, coffee corners, yeah, where you can relax. Here, for example, Google. Yeah, Google is one of the most advanced companies in terms of shaping the work environment itself. Yeah, because they have quite an open space. Yeah, nice. Almost when you are in the office outside, you have a nice park with green, lush green areas, and that's really, let me say, stimulating here your ideas. Yeah, and then within they have coffee islands. Yeah, they have islands with some sofas nicely to sit down to have a chit chat. Yeah, and they can do this because it's all about to stimulate creativity, to come up with new product ideas, with new developments. Yeah, and that cannot be forced. You cannot force out of one. So, and now you have to develop. Of course, you can push, but the outcome is never be the same. and they never be the same quality. Yeah. Of course, you can have an R&D department, yeah, with some stuff, and then they have to find a new or develop a new product, and you always put pressure on them. And this week we have to achieve this, and that week. But with such an approach, never ever an outstanding product is the result. The outstanding product is a result often of trial and error, and really to be here creative. It is not time bound. Yeah, but they don't understand this. You understand?
Yeah.
Financial situation, of course. Yeah. If you make some profits, it's better than you create just losses. Product and service offering. Yeah, they really look what the market really needs. Yeah. So it's about that they do a proper market research. They find out what the customer really needs. Yeah, I told you, it's not about the vision itself. It's about the purpose. The purpose is always to satisfy a need. And what is the best way to satisfy a need? Buy a product, buy a service. That's what should count. Yeah, but sometimes it's just about to produce something and to sell it at the highest price to make the highest profit with it. Whether it lasts or not, whether it's working or not, secondary. Yeah. Then here, when it comes to a summary, what is effective reputational management about? Then we can say it's here about improving relationships with shareholders, creating more favorable environment for investment, for access to capital, recruiting and retaining the best employees. Yeah? A motivated employee is the best resource you can have. Yeah? But if you destroy a motivation by being suppressive, then you will never become an outstanding company. Yeah, of course, you make some profit and you think you maximize your profit. Yeah, in the environment you work. Yeah, but is this really the maximum? No, it's not. Yeah, the maximum you can only achieve if you really treat your employees good, because ultimately they are the one creating the business. We are doing business. Humans are doing business. It's not the machines are doing business. Yeah? But that's often forgotten. And nowadays with artificial intelligence, we have also this issue that they say, even, let me say, administrative services we replaced by AI. What in former days, let me say, in a marketing department, 3 people can carry out, that can be now carried out by 1 using artificial intelligence and coming up with leaflets and whatsoever. But is the quality really the right one? Is it really that there is a human factor in between, which is based on emotions? Question mark. Yeah, that's here to think about also when it comes to reputational management. Attracting the best business partners, suppliers, customer. That's also about lot about trust. Yeah, nowadays it's not that one company is competing with another company. It's always about that value chain of companies are competing against each other. So when you think about the aviation industry, you have on one hand, let me say, Airbus. On the other hand, you have the Boeing. Then the whole company associated with Airbus are competing with the whole variety of companies in the value chain of Boeing, so that Airbus is competing. So it's not just 2 companies competing with each other, and that you have also to take into consideration, and therefore you must build here a good value chain where you attract here the best business partners. Yeah. Reducing barriers to development in new markets. Yeah, what's now going on is quite the opposite. Now they increase the barriers. Yeah, but up to let me say the administration of Biden, it was always free trade. Yeah, now it's the opposite. There is no free trade anymore. It's everything about protectionism. And protectionism we had already in the 1800s. And there we already found out that it is not working in the long run. Then in the long run, it destroys and led to world wars. That was the consequence. But yeah, this orange guy doesn't understand this. Sorry to say. Yeah, and it's really like this, as Plato already say, if the people don't interfere in the politics in the right way, that they claim here really participation, they are always ruled by fools, by idiots.
Mm.
Yeah, because the idiots are always the one, they are shouting the loudest, and everybody bows down just because in front of these idiots.
Mm.
Yeah, sorry to say that. It's really because we were already in the development much further, and now we are progressing back, and it seems that we didn't learn anything out of the history, and that's really a pity. And you see it. It's all is quite unstable. All is yeah. The peak is already. The peak was, in my opinion, reached somewhere in the mid-90s. That was the best time, and then from that onwards, it's not the same stability anymore. Yeah, minimizing threat here. Yeah, litigation and more stringent regulation. That's all here what you can do. Reducing the potential for crisis. Yeah, right now it's the opposite. Right now we are increasing the potential for crisis. Yeah, in every corner there is a crisis, and then of course that's already negatively impacting the businesses. Yeah. Reinforcing the organization's credibility. Yeah, of course, you need to have a firm standing and a solid standing, solid financing, solid management. Yeah, whenever the banks are evaluating you as a company, if you like to take out a loan, then they look also into the quality of the leadership. Yeah, which management is operating? What is the reputation of the management? At least it is the case in Europe. Yeah. I don't know whether it is done here in the same manner. Yeah. Concept of corporate social responsibility, CSR. That is also a terminology which is enforced much more in the more recent time. Yeah, so that even in Malaysia there is an initiative ongoing which shall lead to so-called social entrepreneurs. Yeah, so there is even let me say a governmental funding available for such companies, that they have here to pay, for example, lower income, lower company taxes, and so on. They have some support. But suddenly, what is the consequence? Whenever a company is formed new, they try to achieve this social entrepreneurship status. Whatever they do now, almost every new company is a social entity, which is also nonsense. Yeah? Because they didn't really define what is the social entity really about. Yeah. So it's a kind to give an old clothes a new painting. In my opinion. But the concept. What is the concept of social responsibility about? Of course, the commitment really to operate ethically and to contribute positively to the society. The contribution positively to the society can also be that once in a while you give some money, you donate some money to a charity, and that's it. That's also positively. So therefore, it depends on the level. A voluntary initiative, and here it's only a voluntary initiative so far. Which goes beyond legal obligation. It should be also in a way mandatory that you have to provide here or contribute here to the society. What are the key aspects? You see here the key aspect visualized. It's about environmental sustainability. Just imagine if we continue to go on to emit carbon dioxide at that rate which we are doing right now. Then let me say, in another 3-4 generation, there is an issue that the people will have with breathing. Because it is that you contaminate here the air. Yeah, if we continue like this. Yeah. Because just imagine when we burn fuel, yeah, the fuel that not the crude oil, it took millions of years to form, yeah, and within 100 years we burn all of them. That
Yeah.
cannot be healthy. That cannot be healthy for the balance of the world. Just imagine, yeah, it took millions, and within 100 years we burn almost all, and that's not sustainable. Yeah.
Yeah. And then what happens if we run out of oil? What are we going to do?
Yeah, run out of oil, then the atomic energy they intensify. Yeah, that's. But if we have a blowout, then yeah, phew, it's really yeah, social engagement, philanthropy. Yeah, that's also an aspect here, a key aspect of corporate governance. Ethical business practices, yeah, workplace diversity and employee well-being. Yeah, that's also part of the game. Yeah, yeah, workplace diversity. So everybody, yeah, has the same chance. Yeah, and let me say there is no overruling of someone just because of ethnicity. Yeah. So if they are capable, if they have the background, yeah, if they have here the expertise, they shall also be regarded. Yeah. But I don't think so that this is. Yesterday I had just a discussion with someone who is right now approaching the deep the PhD, yeah, and must I would like to work in public service. And he said he doesn't really have a chance, although he's the best qualified one. Yeah? He passed already all exams, but he's an Indian, no chance to get into public service because there is a preference. Yeah, that's not workplace diversity. That's not fair in the way. Yeah, that's not corporate social responsibility. That's yeah, some try to protect their own interest, and yeah, that's it. Stakeholder engagement, responsible marketing, and consumer protection. Yeah, that's also part here of social responsibility. So that they are really, yeah, that the company is really liable for the product because they bring the product onto the market. And of course, they are liable. As long as the product is on the market, they shall be liable for it, whatever is the outcome. Yeah. And not that they say, oh, no, let me say, if they come up with a faulty car and the airbag doesn't work, and if you have an accident, then you can already say goodbye. But it's because a component of the car was not working properly. And then they don't say, oh, warranty already gone. We are not responsible. Of course, they are responsible. Yeah. Also, they should be responsible. A company should be responsible not only for the production of the company of the product. It should also be responsible for the recycling. Yeah. In the same manner, we assemble a product. We should disassemble the product. Just imagine if we do this really like it is done in nature. In nature, everything is recycled. Yeah. Everything. Yeah. But what we produce is not recycled. It's just waste then. Yeah? But if we would set up, then we can automatically double, for example, jobs. Yeah? Because we need the same job. What we need to assemble an item, we need also someone who is disassembling the item. Yeah, but right now, that's not an idea even. No politician ever addressed this. That would be, but that would be really a development which shows really social responsibility. Yeah. You have
usually they have to package it in terms of savings. So if a company recycles and if you tell them that you will save money, then they will do it.
Yeah. Yeah, but they cannot save that. It's
much.
Now here you must also understand there is a priority. If you have to do a lot, yeah, to achieve a profit. Yeah, and if you do recycling, and if you can make some money, then this is so-called hard-earned money. Yeah, it's not easy money. So businesses don't only go for maximizing of profit, they also go of minimizing efforts to maximize profit. And therefore, such initiatives, they will always have a hard life to come into existence. Because they have to do much more compared. If I'm a real estate agent and I'm selling, then there is not much effort to make a profit. I buy low, then I keep it some time, then I sell it on a higher price. So there is not blood and thing that you and sweat you have to put in to get the profit. But if you have to recycle and to dismantle, then of course you have to do a lot. And so therefore it's not really appreciated unless you force it. You must force it. In that case, I would even say that the government, they are in the driver's seat to drive this forward and to force here the companies. But the companies, they have a strong lobby. They say, no, we cannot afford. If you want to us to do this, then we cannot. We have to lay off even people, and then you have unemployment. Do you want unemployment? Then, of course, we can proceed. And then the government already bang down and say, oh, no, we don't want. Forget it. It's like this. So honestly, it's okay. Just here you see some of the points I always mentioned here, the details. So you have to each concept here a short sentence so that in case in exam you are asked for, then you can refer here what this is about. Even in more total. What is responsible governance in detail. It goes beyond maximizing profit, and it considers here the impact to the society, to the environmental. And you can also bring the corporate social responsibility. This is a kind of sometimes addressed question in exam. Describe Carroll's pyramid of corporate social responsibility. Here you see the hierarchy. It's really a kind of pyramid. At the bottom, you have the legal foundation. It's about to obey law and government regulations. Then, of course, the second layer here in the pyramid is about that, of course, you need to be profitable and you need to think long-term survival. So long-term survival means, of course, in the short run, you can also sometimes make a loss. It just means, you need to be profitable in the long run, so that you can stay in business. And then, of course, that's what really is the add-on. It's about the ethical layer. So you should always avoid any questionable practices. And honestly, we have a consciousness, and the consciousness usually should tell us what to do and what are the don'ts. Inherently, you have an attitude normally, and therefore you should here to avoid everything what is harming, frankly spoken, others. Then we summarize everything. And then on top of this pyramid, that's the so-called philanthropic layer. And the philanthropic layer is about really giving back to the society. Where do you get the profit from? You get the profit from the society. So either you give it already back to the society in really favorable pricing, or you have some higher pricing, and then you really engage here also with social initiatives, to build here, to contribute to hospitals, contribute to educational system, what has also a long-term effect. Because if you invest, let me say, in kindergarten, that's investment into our children's future. When you invest in hospitals, of course, then you deal here with the health of the general public. That's here what how you can describe here Carroll's pyramid, yeah, of corporate social responsibility, to have a picture. Yeah. Then the next one is here the concept of this corporate citizenship. Yeah, corporate citizenship is here. Yeah, it takes everything into account. Yeah, the complete impact on social society. So whenever you are manufacturing a good, yeah, it's about the footprint, the ecological, the economical and ecological footprint of that product. Yeah, so you have to also to see the impact over the whole production chain. Yeah, if you have a very complicated product, yeah, electronics, yeah, with a lot of rare earth metals and so on. Yeah, of course you have also to think about where do the rare metal comes from. Yeah, and how they are how they are yeah the mined, yeah, how they are mined and exploited here, and because they have also some very negative impact in terms of polluting the industry, the environment. Yeah, and that has also to be taken into consideration. Yeah, just imagine. Does it really make sense that if you have a mobile phone and every 2 years you replace the mobile phone by a new one, and a lot of minerals, yeah, are in such mobile phones, yeah, which are extracted, really polluting the environment. Yeah, but nobody thinks about that. They all see this nice nice gadgets and the nice tools. They don't see what's really behind, and therefore the more important it is to recycle here the components. Yeah, not just to throw it away and that's it. Yeah, but yeah, and when it comes here to the corporate social responsibility and corporate citizenship, we speak about the triple bottom line. Yeah, we have the business goal. Yeah, but the same important is the social development, and the same important shall also the environmental protection. Yeah? In some countries, environmental protection is not at all issue. In others, yeah, they try really to reduce every emission possible, that even the children already say, no, I don't buy this good because this is transported from so far away. I don't want this. I only buy here local products, for example, because that is not polluting the environment by that much of transport. Yeah? But that, of course, the awareness has to be built already in our children, that they act accordingly. Yeah, but if they are never confronted with this kind of thinking, yeah, where should they know about? From where should they know about? Yeah, they only see then at the time the negative consequences, but then it's already a bit too late. If you cannot breathe the air anymore because it's that much polluted, or if it is so hot in a region that you cannot live anymore, that you have to migrate, yeah, that's then the consequences. But they are irreversible. And that they don't see. So therefore, another guy mentioned it's like this. Yeah, we are sitting in the train is moving fast, but nobody cares about the direction. And if you would sit in front of the train, then you would see that there is a fjord, or there is, let me say, a valley, and there is no bridge. So it's just a matter of time until we end up there. Yeah, you see here this three triple bottom line. Yeah, you can also translate here. It's about people. Yeah, it's about the planet, and then it's about profit. Yeah, but that must be a good compromise, and that must be sustainable. Yeah, so it's about viable. Yeah, it must be bearable. It must be equitable. Yeah, that it makes sense. That you always take into consideration what are the long-term consequences. Yeah, so CSR emphasizes on the obligation and accountability to society, corporate social responsiveness. That's about proactive action, yeah, and activity to fulfill here the obligation. And social performance, corporate social performance emphasizes, of course, outcome. These are here the aspects of this corporate citizenship concept. The overall corporate governance framework, yeah, you see here in the center, yeah, you have, of course, the applicable law and regulation. Then, of course, you have the organizational constitution. Whatever the organizational constitution limits, that shall be, or defines, that shall be followed. Yeah, it's about the structure. The structure, of course, is triggered here, policies and procedures, and you have also principles and practices here to follow, so that you see here what are the components of a good governance framework, which is holistic. Yeah, law, constitution, structure, procedures, practices. Yeah, just that you have here the most important points. Yeah, and I've here mentioned, yeah, what applicable laws. Yeah, you know here better, because as with a lawyer background, you know what is here requested. Yeah, just in terms of law, I would like to point out especially the current situation in Malaysia. Yeah, we have the company law, we have the insolvency law, which is here regulating directors' qualification, disqualification, financial reporting, Company Act. Yeah, so we have here the link to SSM Company Act, the latest version. Then we have the regulations such as listing authority rules, the Bursa Malaysia listing requirements. That's the BMLR. Here you have also the link. Then we have standards in terms of accounting, in terms of financial reporting. Here in Malaysia, yeah, you have three which are most widely applied. Yeah, for small company, we have the MPERS. For the medium-sized company, we have Malaysian financial reporting standards, and for big companies, international financial reporting standards. Then voluntary codes of best practice. Yeah, you see here the Malaysian Code of Corporate Governance, also here with the link to the Security Commission, because they are administrating that. And then we have already this Malaysian Code for Institutional Investors, which is also here part of ethical, or regulates ethical behavior just from the investor side. Yeah, but it is closely related, of course, also to the business. Yeah, the organizational constitution. Yeah, that's the articles of association. Yeah, here you have also the standard document here from SSM. Yeah, it what matters are covered. Yeah, shareholder rights, appointment, powers and duties of directors, board proceedings. Yeah, how you have to conduct your board proceedings, which time, to which extent, and so on, power and duties of the company secretary, provisions for winding up, and accounts and audits. These are some aspects regulated here by the articles of association. Structure, yeah, here you have 4 different organizational structures. Yeah, we differentiate here with siloed, between siloed structures, yeah, and quite open structures, very flexible one. Yeah, when we think about siloed structures, yeah, usually most companies, they are organized here either in divisions, so that here the product is taking the lead, and the organization is according to core products or whatsoever. That's the division, or you do it based on functions. Yeah, I think in Malaysia, mostly it's about functions, yeah, that you have the sales department, marketing department, and so on, then according, very hierarchical. Yeah. And others are the metrics organization. Metrics organization, here you have on one hand the functional manager, and on the other hand you have the divisional setup. This of course is more flexible and usually find in huge organization, which must be quite flexible. And of course flat organization becomes more and more predominant, because they say, okay, we have to organize here a flat organization to cut out here any unnecessary hierarchies. Yeah, but often, also this is typical human. Yeah. A CEO even feels much more powerful the more subordinates he has, the more layers he can command. Yeah, but it's not about the status, of a CEO. It's about what is the outcome, of the CEO tasks. Yeah, and that has to be organized in the best possible way so far. Yeah. Yeah, you see here the structure. Yeah, you have the board leadership structure with the board, with the CEO, with the non-executive directors, with the independent executive directors. Yeah, how decision is made. Yeah, which management committees you have, which board committees you have. Yeah, and of course it's all embedded or surrounded here or within. It shall be acted within laws and regulations. And of course follow strategic objectives and taking into consideration risks and of course people. Yeah, I would even set the people in the middle. Yeah, you see here some ideas you have. Yeah, then policies. Yeah, you see here mission, vision. How it is usually built up, with the board of trustees, with the board of directors. Then they have a planning committee. Then they come up with the strategic plan, the operational plan, and that is then triggering the decision making, and ultimately is then securing the output. When it comes to the components, you have the policies. Yeah, what are policies? Yeah, they govern how the company conducts the operations. Yeah, of course, policies, they are often highly individualized. Yeah. And we have also procedures. Yeah, procedures, these are more standardized. Yeah. Policies, here the code of ethics, whistleblower can be a part, insider trading regulation, sexual harassment, that they take action if it is not just a gentleman's approach. If you make some double meaning compliments to women, that's already harassment. Risk, IT, code of ethics. That's human resource, related party transactions. Yeah, often these related party transactions, they are often exposed to the interest. Yeah, and if you have a related party, often it comes that they try here to shift profits from one company to another company. Yeah, or here to try to level out. Areas of influence. Yeah, and here, of course, you need special regulation that it is. And the technical term is at arm's length. Whatever you do within with related parties must be at arm's length, must be according whatever you would do also with external parties. Yeah. Bribery, conflicts of interest. Yeah, that's here some policies which you can implement. On the other hand, when it comes to procedures, that is, as I mentioned, more standardized. Here it's about strategic planning. Yeah, you have a procedure exactly regulating what has to be done in order to carry out the strategic planning. Standard operational procedures. That's here the technical term often used in the companies. Yeah, but some companies, frankly spoken, it's good that you have standard operational procedures. But if you regulate everything meticulously, then you deprive here the ordinary stuff from even critical thinking. Yeah? And then, of course, it's like this. They only do what they need to do. They don't think a millimeter beyond that, what they need to do within these procedure steps or what is in front. And if you have such a meticulous regulation, that's then that you anchor siloed tanks. And if you have this, that's not good for the company. For the company, it's always good that it is holistic. So to a certain extent, procedures, of course, when they are repetitive, make sense, but they shall also give room, empowerment to the individuals. Yeah, because if you regulate everything, then of course the next step is you have to monitor everything, you have to control everything. Yeah, and then you deprive people from their human aspects. We as human, we want to think, we want to be creative. Yeah, but if you regulate everything, then this aspect is gone. But of course, for each component or each aspect, you should have some regulation. Regulation. Yeah, it's about disaster recovery. Yeah, it's about internal controls, health and safety, recruitment, procurement. Yeah, so essential repetitive activities shall be, of course, here governed by procedures where everybody can look into and know exactly what's going on. Yeah, usually you have also a kind of flow chart. Visualized flow chart here describing the procedure, where what has to be done, how it has to be done, and who is doing it, who is responsible. Yeah, if you don't do it with responsibilities, then often it is it's not my task. Yeah, or this is not it's already the next person. And if you think like this, yeah, then there is no real teamwork. Yeah, yeah. So what concepts we have furthermore approaches. Yeah, when it comes here to the regulations, yeah, we have rule-based regulations. Yeah, that's strict rules. Yeah, we have principle-based regulations. Here you have a kind of framework, kind of ideas, kind of principles which you have to follow, but it is not ruled or it's not defined in detail how you achieve that. Yeah, you should achieve the principle. That's it. Yeah. And how you achieve it, with which means, it's up to you. Yeah, this gives more freedom. Hybrid approach is a kind of in between. And then in Malaysia, we have the so-called CARE approach. Yeah? And in terms how you do things, we have comply or else, comply or explain, or apply or explain an alternative. These are here the approaches we have. You see, to each approaches, I have also listed here what is this this approach about. Yeah, prescriptive detailed regulations. Yeah, what is the advantage? Yeah, it's clear. It's very easy to be compliant. It is consistent. What is the drawback? It's very rigid. Yeah, it is very focused on compliance. So you have extra costs to be compliant, and it can be very complex. Yeah, because suddenly you have so many rules and so many documents to apply that you even lose the oversight. Yeah. What is the essence? Yeah, it describes here by statute the country's legislation, often rule-based. It's like what the country is following. Usually you will also see then in the different areas of the society, like in business and so on, whether if the country is rule-based, then of course also the business business law is in a kind very rules-based. Yeah. Compliance is enforceable, mandatory, and disclose compliance you have, and any deviation, immediately penalties and legal action. Characteristics very clear, standard rules, any deviation is punishable, straightforward. Because you can easily identify whether you comply or not. Principle-based, yeah, that's you adhere to a spirit. Yeah, it's usually based on judgment. Yeah, you have some overarching values, some ethical standards. The ethical standards drive here the approach. Yeah. So what are the advantages? It's flexible. You can adapt it. It's very innovative. It has always a holistic perspective. What are the drawbacks? Yeah, some ambiguity can result. Yeah, because it's so broad. Yeah, it may face some challenges when you interpret the principles. Yeah, because you might be uncertain how to follow. Yeah, because you have to apply subjective judgments. Yeah, and subjective judgments, yeah, can be ambiguous. Yeah. Lack of clarity, enforcement. Yeah, yeah, not everything is 100% enforceable. Yeah, that's here some drawbacks. Principle-based, in a sense, required under stock market listing rules. Non-compliance is allowed, based on the premise of full disclosure of all areas of non-compliance. Yeah? Here you have really some freedom how you follow here such rules. Yeah, so therefore you explain alternatives. Yeah, so you need not just to adhere or stick to a strict rule. Yeah. Focus on objectives rather than the methods. Yeah, audit committee's main role is support the oversight. Yeah, not to punish them. Minority shareholders should be treated fairly. Universality of application. Yeah, you can find here principle-based approach in various countries. Yeah, with different jurisdictions, because yeah, it's very flexible. Yeah, that's here the characteristics about. Yeah. Yeah, and often this approach is adopted by countries that want to empower their stock exchange body here to set for the standards. Hybrid-based, it's more or less, you take out or you combine here several elements. Yeah, some areas might be very rule-based, other areas are principle-based within a framework. That's to put here a summary, here the hybrid-based approach. So it's a combination of different mechanisms. Care approach that is defined here in particularly under the Malaysian Code of Governance, 2021, and here it is the shift, from comply or explain, and now you are, we have the concept apply or explain an alternative. Yeah, that's here the essence. What is driving here this care approach. Yeah, so care approach, these acronyms stands for abbreviations. C is for comprehend. Then we have apply, then we have to report, and we have to comply or else. Yeah, the E stands for else. That's here. The issue. That's very important. The care approach might be a good tip for the exam, that you look here into more detail. Yeah, comprehend, apply, report, and else. Yeah, this comply or else. Yeah. So what is comprehend? Yeah, the leaders need to understand what is the business case. Yeah. So they incorporate here the integral role of economic, environmental, and social responsibilities in their performance as well. You see, some stock listed companies, they come up here also with a kind of social report, a sustainability report. It's nice, but I read some sustainability reports, and then I found out that they save so much electricity because now they have all low energy consumption bulbs in place. Oh, that's a bit nice for the beginning, but not really sustainable in terms of environmental sustainability. Then decision making, also according to long-term sustainability. Ensure employees also understand here the governance requirements. You have to train, you have to instruct also your staff accordingly, that they are aware about. You apply. So what is apply? Apply the principle and practices from inform and substance. Here you know the terminology substance over form. Principle-based regulations are often substance-driven. Rule-based regulations are often here form-driven. You can answer your own in which direction it's going in Malaysia. In Malaysia is a lot about borangs. Borang, form. And often the form doesn't even make sense, but you have to fill in. If you don't fill in the form, they don't deal with it. And in other countries, they say we don't need the form. It's about the substance. Whatever is the essence, that's what is counting, and not whether you put this in a red color, in blue color, whether you put it here with the dot or with a comma or whatsoever. But Yeah, frankly spoken, this forms-based approach is, with this, the administration creates a lot of jobs because, you need a lot of stuff just to fill in forms. Yeah. But in Europe, frankly spoken, this form is not value adding. Yeah. And if it is not value adding, forget about it. So it's about substance. Yeah. So and mostly it's about, even in a letter nowadays, you can formulate your demand, and then the letter is automatically read it by artificial intelligence, and is then extracting the essence, and so you don't need even a form. Yeah. But here, and even the interesting thing is here, you get the form in paper. Yeah, if you deal with banks, then they can come up with a paper, and you have to fill in paper form. Yeah, bit outdated, but yeah. So encourages the boards, that you should, if in principle you should apply whatever is given in the code itself, and if you are unable to apply, then of course you have here to explain why not. And this application is always about to find here suitable alternatives. It's all ultimately, you must apply it in that way that you meet the intended outcome. So whenever you argue from the side of the outcome. Yeah. So with applying this, it's the best for me to achieve this and this outcome. And then you explain what is here the relationship between application and outcome. Report, the Malaysian code also enforces here meaningful explanation, how you apply each practice, because you have here some practices to fulfill, some points to fulfill. And you have, if you don't follow exactly the format, then of course you explain how you achieve it. And dedicated to all the shareholders, potential investors, and other stakeholders to report accordingly. And then comply or else, if you are not particularly fully in line with what is requested by the code, then of course, you can here explain how else you achieve here a good corporate governance. Ultimately, it's about to achieve the reason for corporate governance. And therefore, you can also voluntarily adopt other best practices wherever you get it from. And if it serves you and you can really evidence that it is working for you, then of course you can use. You can also go beyond the mere compliance, because in the code is always just the minimum requirement, but you can go beyond that. Nobody stops you, if you want to be best performer. And such things as award for the best company report, annual report, is of course accelerating here this approach to go beyond mere compliance with the minimum legal requirements. Alternative. You can comply or explain the alternative. What is exactly the alternative about? And that you make it here transparent. Purpose of an organization. What is the fundamental reason of why we have an organization? What is the core culture? The purpose, the philosophy, and the priorities. Why? The why of the work. That's the important thing when you should design here a governance framework. Why are we doing this? What is really the purpose? So the purpose is not just about making money. The purpose is fulfilling needs. So if there would not be a need, there would not be a company. And if there would not be a company, no governance. That's and no profits. So what triggers is ultimately the need of a customer. And that's the driver, and not the profit is the driver. Yeah? And Western companies, they highly act like this. What is the requirement of the customer? How we can fulfill the needs of the customer? Yeah? And therefore, you see why, let me say, the Americans are so innovative. They always come up with something new, and then the world is even astonished. Yeah? Because they always think from the perspective of the customer, what could serve them in the best way. And they even create new demands by new requirements. Yeah? They say, oh, okay, it would be nice to have this no, holograms, yeah, because the holograms is even more attracting when you have a conversation as just a picture or a video. And then, of course, they create a new demand, and suddenly, oh, new technology comes up. But if you just do, I want to maximize the profit, yeah, then such new inventions would never arise. Yeah. Yeah, corporate, no, assimilation of corporate practices. Here, it's also about that, yeah, that different frameworks, they come more closely together. Yeah, that they really try here to harmonize, as it is the case in international financial reporting, that we have a harmonization tendency. Also, it's here about that we should achieve here a governance yeah, code on global level. Yeah, that's here. Yeah. And we think here, you see here, organizational purpose that is driving the whole thing. Yeah. Of course, you have to be compliance. Yeah, you set up compliance in terms of structure, policy, procedures, and people. Then you have the governance system, yeah, taking care. The governance system shall highly shape the culture, the organizational culture. And of course, the organizational culture has a huge contribution to the organizational concept. Yeah, when you think into the academic world, a lot of theses, yeah, dissertations were written on the impact here of good governance to organizational culture. Yeah? And then you define what is the dependent variable, what's the independent variable, what's here the mediation variable, and so on. Yeah, that's a lot papers are here available, yeah, to illustrate here the connection between these things. Yeah. So, what is the importance of adopting good governance? Why we do this? Yeah, we don't do it just for fun. Yeah, good governance, it's about rule of the law, transparency, good consent-oriented, accountability, effectiveness, efficiency, equity and inclusiveness, and responsiveness. Yeah, long-term sustainability, improved access of financing, lower cost of capital. These are things, whenever you have a case study, and the case study outlines some shortcomings, and then you are asked, and what would you do, what would you need, or why would you implement now the good governance? Then you can refer to this slide. Yeah, it's about to improve external finance. Yeah, it's about to achieve lower cost of capital, improved operational performance, increased firm valuation, improved share performance, reduced risk of corporate crisis and scandals, effective decision making, ethical behavior, anti-corruption tool, succession planning is is easier to carry out, improved oversight, and so on. Yeah. What is the weakness? What is the consequence of a weak governance, on the other hand? Yeah, of course, failing companies, reputational problems. Yeah, for example, you have here Volkswagen, Siemens. Yeah, these are also listed or explained as a case study here in your attachments. Yeah. You see here why business fails. Yeah, that's a nice or an interesting evaluation. Yeah, so 46% fails. Businesses fails because of incompetence. It's about the leaders. The leaders, they drive into the wrong direction. Yeah. Then in the second place we have lack of managerial experience. Yeah. Then the third place is lack of experience in the industry itself. Yeah, so it's about highly why business fails. It's about the managers who make a mistake. Sorry, just to answer as to answer a short message. Just
Okay, no
yeah.
problem.
in- uh, yeah, that's here. Yeah, so loss in reputation is really one of the major consequences of weak governance. Yeah, whenever you lose your reputation, to win here, yeah, trust back. That's one of the most difficult things to do. Yeah, excessive regulation. Of course, if you have very excessive regulations, even with regulation which might be contradicting, then it's overburden the bureaucracy. Yeah, and often less is more. Yeah, you should govern your company, yeah, with a few really good guidelines, procedures, yeah, processes, descriptions, and that's it. Yeah, overruling and administering doesn't really help here in that way. Yeah. If you have a weak governance structure, and then it's hard for you to win trust in capital markets. Yeah, and therefore you cannot even raise capital on so raise new investors, yeah, from the capital market, because they simply don't trust you so far. Yeah? The development of shareholder representative bodies. Yeah. Here it's also about, yeah, of course, the bodies, they shall regulate here, but here often the bodies themselves have some weaknesses. Yeah. So it's often the best that even you decide whatever governance structure fits you best, and then you design it accordingly. And you can combine here various aspects, because it's still free how you do it. Yeah. And you can go here the extra mile and do more as requested. Then you are at the safe side, and then you can even balance out here weaknesses which would otherwise occur. Yeah. Governance and management here, yeah, it's setting up the structures, policies, and rules. Yeah, that's a duty which has to be executed by the board of directors. Yeah, and then of course they can delegate the execution to the operational levels, but they are always in the driver's seat. They cannot delegate the responsibility. They can only delegate the execution, but not the responsibility. That you should hear. Yeah. You see here the powers, the day-to-day affairs that are usually delegated here to the executive management team, and they, of course, on their term, they forward it to the operational levels. Yeah.
So they can only delegate responsibility, but they cannot delegate. They cannot delegate responsibility.
They cannot delegate the responsibility,
Yeah, okay.
but they can delegate the execution.
Okay.
Yeah, the execution can be delegated, but the responsible not. The responsible is always, let me say, is always remain at their level. Yeah? Because ultimately, if something goes wrong, they cannot say, I instructed the worker on the benchmark to do it that way. It's not my fault that he is not following the orders. Of course, yeah, the COO ultimately is responsible that the worker is following the instruction, the safety instructions. Yeah, and for example, most European CEOs, they always go the walk. Every morning, at least, they make a round in the working, so in the production premises, just to up themselves what's going on there. Yeah. And that's a way of management, and to be also close to the basis worker. Yeah? If you lost here the connection to your workers, then you might end up in even making the wrong decisions, because you don't know what's going on in your premises. Just sitting in your office and in your fancy nice office and deciding and just saying, please provide me a report, please provide me another report, I need more input, and never go out to the front line, then you cannot know what's going on in the front line. But the music is playing in the front line, not in the office.
Yes.
Yeah, then we have finally here the case study of Siemens. Siemens, for example, that's, it's also operating here in Malaysia, manufacturing industry, helping here with industrializing, here energy, for example, public transport. They have a lot of segments, And also in the mobile phone industry, telecommunication and so on, they are engaged so a lot. And at any cost, once the management want to win every contract, which is globally published, and to win the contracts, they were even prepared to pay bribes, and they paid bribes, to governments, to officials, to politicians, whatsoever, up to 1.3 billion euro. Just imagine, and then you can imagine where suddenly the politician becomes that rich. So, for example, in Bangladesh, Siemens paid 5 million to the son of the prime minister to win a mobile phone contract, and so on. And this policy of bribing was part of their business, their way to do business. So it was far beyond ethical behavior, because they say, as long as we are not punished, we can do bribes, as we are not as long as we are not caught.
It becomes part of their. They just put it as part of their cost.
That's part of their cost. It's like this. Of course, if we want to have here this national identity cards implementation in Argentina, then we pay just 40 billion. What is 40 billion if we win a 1 billion contract? Nothing. So it's a small amount. And then they won the prize, but let me say. At some point, they were then brought in front of the court, because also Americans, they have some companies dealing in these segments, and then they filed a lawsuit here.
Because it creates unfair competition.
Exactly, and that's obvious that this is unfair. And ultimately, you see here from 2002 to 2006, they had a budget each year of these 50 millions and so on, but they did it much longer. If you think about 1.3 billion, that's a lot. And then finally they agreed just to pay another 1.6 billion in fines, to settle all the legal disputes.
Okay.
And here, if you think about the case study itself, the questions from your point of view, how could this happen? Illustrate the reasons for bad behavior, argue your point of view in broader perspective, and link it to the approaches to the corporate governance, and which mandatory regulations were violated, which approach could you recommend to follow in the future, and which organizational changes have to be made to avoid bribery in Siemens. That's here the case study questions, and I guess I have also provided you with the solution. Give me a second, then we look here into this holistic case study. I guess it's here, holistic case study. Then you have questions, and the other one, holistic case study solution. And then you have an idea how to answer. You have here even in a visualized form. Let me make it a bit bigger. Then I put it here inside. This we don't need here. That's just it. You see here. What is the case about? Short summary. where they paid how much bribes, bribery footprint, and the questions, and then you see here what is the detail about, and leadership failure. Donut at the top. They condoned even bribery. Executives participated in the schemes. No ethical role modeling. Short-term profit focus. That was the reason why it failed. What cultural problems did we have? Win at any cost mentality. Corruption is just normalized. Bribery is seen as a business expense, as you mentioned. No ethical awareness training. What are governance gaps? Weak internal controls, no whistleblower protection, board oversight failure, inadequate compliance function. How the corruption cycle works, pressure to perform. Because they had a high pressure to perform, aggressive revenue targets were issued. Of course, then they had to accept here from a cultural perspective that bribery is just normal. Weak controls. Nobody looked into that. They didn't even had a governance department at that time. They institutionalized, because they said, okay, they had even a budget line, bribery, budget line, special expenses. They said it in German, it's Geschäftsanbahnungskosten. Quite a nice terminology. So these are, they named it costs for starting business. Entrenchment, 7 years were unchecked. So what was the environmental factors? Operating in countries with weak rules of law. If you look here, Nigeria, Bangladesh, here the law is a much different one than in Germany itself. Therefore, that also here facilitates here these briberies. Because they say, also in Malaysia, I was informed that from every contract, every governmental contract, the Rosma, this very, very beautiful lady, took a stake. Every contract. Just imagine, every contract the government concluded, if they, let me say, bought some naval ships from another country or some airplanes, from every contract she ripped off a part. If this is already ongoing on the highest level of the government, then government contracts prone to corruption. Competitors also engaging in bribery. Sometimes in some areas, also if the competitors are doing, then we cannot stand back because then we lose competition, lose in the competition. Limited international anti-corruption enforcement. Decentralized operation. And by the way, the interesting thing was that there is this Malaysian anti-corruption committee or this organization, and then the head was just replaced by a guy who is very devoted to the prime minister. What shall this? Honestly,
not much.
That's so much corruption that it is a sea of corruption. Organizational structure, decentralized operation with little central oversight. If you empower here local or operations that much that they can do whatever it is necessary, then and you don't oversee them from a central point, then of course such things can happen. Often complex corporate structure are used to hide the funds flow. Because you have also to organize the flow of funds, and even if you have money laundering, then they come in with a nice suitcase full of dollars or euros, and no customs duty is ever looking into that. Use of intermediaries, shell companies, insufficient financial transaction monitoring. That's all here happening. You have also a detailed analysis. Here, reference to the agent theory, stakeholder theory, viewpoint. What is happening? Stewardship theory. That's another theory which is also rule-based versus principle-based. Would also be relevant here. You see, you have here some really good inputs how you can deal with such a case study. That would bring me then to the end of today's session.
Okay. And these answers will be given to us, right?
That these answers I will already upload, but
okay.
I would really push you a bit that you first think and then you get the answer.
Okay.
Get always immediately the answer, then but it's not an issue. I will upload the results, these suggested solution as well.
Reading the questions. Wow, it's like at this point, I'm not able to answer them. They have to. They seem very specific.
Might not be able, but if you read through one time and you familiarize with the system, whistleblower and so on, then you have already an idea. Then you can say, if you have a whistleblower system in place and the people can anonymously report this, and this is even intended that there are reports, then of course this can avoid such briberies, because if another employee gets some information or sees that here this bribery is ongoing, then report. And that is then now, of course, part of the governance system, that you can report any misconduct so far, and then the governance department is dealing with that. You see, it's really summarized here in a very holistic way. It's also, when they ask how you should do or how should improve, then you have here an implementation roadmap. It's always answered in a way that in case a similar case study is coming up, then you can refer to it. Therefore, it's very, very comprehensive. Because in exam, you don't write 14 pages as an answer. You don't even have the time. But I give you here really the essence, a lot of information. Mostly you can just focus on the headlines, governance structure. If you can already, let me say, give some comments how you can set up a governance structure in terms of hierarchy, independent board majority. Of course, the governance committee shall be composed of independent directors, not dependent directors. If you have dependent directors, then you don't have an independent governance.
Then they will just continue to do whatever they want to do.
Then they just do whatever they want. So therefore, governance shall also not subordinated to the CEO. There shall be a separate chairman steering the governance committee, for example. Because then this governance can also check on the CEO's behavior. Who doesn't say that not also the CEO do something wrong? I have seen also CEOs, they were just, I had once when I was working in Saudi Arabia, I had once the board of directors with the CEO, and the CEO, they intentionally did things that they get personally advantage of doing business there. So in addition that they bring in some goods and components, they get the commission directly to their private accounts. And that such things can only be organized from the top management. An ordinary employee cannot even be involved in such an issue, because they are not even empowered to it. So therefore, the fish always starts to stink from the top, not from the tail. It's really like this. But often they just arrange it and whatever, and then they even escape, and then others are the scapegoats. Yeah, here you have really to each aspect some highlights. Just think about, reflect, yeah, and try to familiarize. Yeah, so you get a lot of case studies. That doesn't mean that you need to go through all the case studies. Yeah, because they are in a way always a bit similar. Yeah, they are looking. Yeah, what is the misconduct, or what is the misstatus right now? What are the shortcomings, analyze the shortcomings, then you come up how you can improve, and then you have even, let me say, a timeline how you can improve. You see here, I guess here I had somewhere, I don't know, what you can do, the roadmap to implementation of a new governance system. Yeah, here at the end. Yeah. So what you can do immediately: appoint independent chief corporate officer, establish ethics hotline, board restructuring, payment freeze on agents. Yeah? Then short-term 6 to 8 months, global compliance team built out, company-wide ethics training, control system, third-party audits, cultural transformation, technology implementation. Yeah, that you even cannot approve such a contract if you don't fulfill certain checks. Yeah, and that can be already driven by the IT landscape itself. Yeah, if you have a proper monitoring system which do a background check, yeah, know your customer. Yeah, then you cannot. There is no line. We have to do bribery, or yeah, you limit payments. Yeah, that let me say. Payments beyond a certain amount must be not only approved by the chief financial officer. Yeah, it must be approved by a committee, for example. Yeah, then it's hard to hide such things. Yeah, and then ongoing what you can do: regular audits, trainings, benchmarkings, yeah, continuous improvement that you have here, Justin. Yeah. That's here. So yeah. Okay. And what I also want to point out, please also have a look. Where do I have it? Now I go here. Yeah, have a look into the 25 questions. Yeah. If you focus on the 25 questions, yeah, then, and the case study, maybe just a holistic case study, then you are already well prepared with this first chapter so far.
Okay.
Okay. Yeah. Then wish you a nice Sunday afternoon. Sorry that it took us a bit longer, but you see,
no worries.
It's always good to discuss, even if it is longer. I cannot say upfront it's 3 hours or 3.5 hours. Maybe then someone doesn't want even to embark. But for you, it's extra service. Yeah. So
yeah.
It shall be okay.
Yeah, I think CG is a little bit more, I don't know, interesting. I think maybe for me. Yeah.
Yeah. For you, it's more interesting because it has a stronger legal background.
Yeah, I think so.
Regulation, and therefore you can identify a bit easier with this background from your perspective. Risk management is more practical approach with the case studies.
Yeah.
Therefore, we most the students, they fear about the risk management, and in risk management the failure rate is the highest because they only provide you with the theoretical slides, the slides from MAICSA, and then they immediately ask you to do case studies, but they never really discuss the case studies. And therefore, please remind me that we do a lot of case studies in risk management.
Okay.
Yeah. Okay. Have a nice Sunday. Thank you for your participation. And don't be scared about the volume. You need not to look into every aspect. You can just dive through to the documents, and where you see, this fits quite well for me, then you take it. With this, test yourself and stop and think. It's nice. But for sure, if you work through a holistic case study, then this gives you a lot of input, as well as the questions, as well as the summary syllabus. I would suggest this is the most important one. Most
Okay.
important. Yeah.
The summary syllabus. Yeah.
Yeah.
Okay.
Yeah, the syllabus is just to give you an overview. This you should know. Yeah. Are you familiar with the terminology? Yeah. Can you come up with a definition? Do you know something about the series? How does the agency series works? What is an agency conflict? What is an agency cost? What is the stakeholder theory? Yeah, you see, that's what you need to know. Care approach. Yes, you see. And then I did it like this. Yeah, that you have here some key definitions. Yeah, and you have some theories, just really short. Yeah, what is the theory about? Yeah, who invented? What are the main bullet points? And if you focus on this and learn ultimately this, and you are able to make some sentences out of that, which makes sense, yeah, then you can answer the question. Yeah.
Okay.
You see the approaches: shareholder, stakeholder, inclusive, enlightened, also with some convergence, just short. What principles? 4 principles. The main, often if it comes to principles or pros and cons, they even say just name 3 principles. You need not even to know all of them. Yeah, just that you have an idea. Yeah, it depends how many marks are allocated. Yeah. Usually definition with principles, then you come up with the 4 principles here, and the definition that's already accounting for 5 marks. Yeah. 8 minutes time. Yeah, in 8 minutes, of course, you can write the essence of this paragraph, for sure. Yeah. This is quite helpful. You have really a very quick overview, and that's just, you see, it's just 7 pages. Yeah, and it's not really densely written. Yeah. I will try maybe in the next thing that I give you explicit some tips for the exam. Yeah.
Okay, that's good.
Exam tips like this, because I saw here exam tips. Yeah. Okay, that you have here such things as well. Yeah. Okay.
Helpful.
Yeah, then wish you all the best. And next course is risk management, I guess. We see each other, and it's on Thursday, 7:30.
Yeah, 7:30. Yeah, okay.
7:30. Yeah, okay.
Okay.
Great. Thank you. Bye-bye.
Bye-bye. Bye.